July, and then the 14th of July, Bastille Day. We will know more on that front, and on the fiscal front, clearly the incoming of new governments in various countries, including in Germany, will also take us to more clarification on exactly where the situation will evolve. But we will, as I said earlier, there is no better time to be data dependent. There's no better time to rely on very strong and solid analysis by all our staff. And I'm glad that June is going to be a combined exercise of the ECB and the national central banks, who will be confronting their respective viewpoint and analysis to arrive at something that will be really consolidated around our three key analytical underpinning, which are inflation outlook, underlying inflation, and transmission. Now, you asked me about the Fed. Let me just say very squarely that I have a lot of respect for my esteemed colleague and friend, Jay Powell. We have a steady, solid relationship amongst central bankers. I think that that relationship is decisive in order to have a solid financial infrastructure on which to make sure that there is financial stability. We have demonstrated in the past that we could actually operate on that basis of consultation and understanding of the financial risk, and we will continue doing so in an undeterred and unchanged manner, I'm sure. Thank you.
The next question goes to Tonia Mastrobuoni of La Repubblica in Italy. Tonia, please.
Thank you very much. Ms. President, do you think that cancelling the tariffs might be enough to restore the trust in the US now? We have seen this mistrust in the dollar, in the treasuries and so on. Or don't you think that the environment is getting worse, and this is also destroying the faith in the US? I'm speaking about the attack to the law firms, to judges, to universities. So the certainty of law is vanishing in America. Do you think that this is also impacting on the trust in America? And my second question is, the US administration seems to have also the ambition to push a lot the stable coins. So how dangerous might this be for the euro if we imagine, for example, big companies like Amazon, Facebook, and so on, launching these stable coins, of course, backed by the dollar? Thank you very much.
Thank you so much for your two questions. There is a nice African saying which goes, you never swim twice in the same water. I think for economic players, investors, consumers, employers, employees, all categories, confidence, predictability, and a reasonable level of certainty are important factors for them to make decisions. And I will concentrate on the European Central Bank. In the mandate that we have of procuring and maintaining price stability, we will certainly make sure that we respect those principles. Predictability, confidence, all based on access to the data, the right data, the safe data, and in as much transparency as is possible with all of you. I think this has been recognized by many investors, and this is a clear answer to your question. On the issue of stable coins, you know that we have regulation in place. It's called MiCAR. It is effective. It's currently under review and consultation for possible improvements. And I'm delighted that this is the case, because we are facing a constant evolution of those digital payments, of those cross-border payments, of those stable coins, which I would put in a very separate category from the crypto assets, or however you want to call them. So the stable coins are a different animal. And clearly having a good, solid regulation that constitutes the framework within which they can operate, I think is paramount. and has been understood by the European Union, by the Commissions, by various authorities in charge of those matters, and will be reviewed in order to make sure that it procures a safe harbor for those initiatives. But let me take the opportunity of this to acknowledge that for the first time in our monetary policy statement, we refer to the digital euro. And that should be a clear signal that not only do we stand ready and do the hard work that is incumbent upon us, but it also acknowledges the fact that other European authorities are hopefully going to accelerate the pace at which we can deliver. Thank you.
Next question goes to Olaf Storbeck of the Financial Times. Olaf, please.
Thanks for taking my questions. I have one question on the restrictiveness or the kind of lack of description of the restrictiveness in the policy statement. Have you discussed, and maybe can you share your views on, your wider views on this, how much it takes to for the ECB to switch into a stimulative stand over the coming months, given all the headwinds and clouds over growth, and how willing would you be to do so if necessary? And my second question is on financial stability, and in particular your views on the independence of large central banks. How key is it for financial stability that large central banks like the ECB and the Fed are and remain politically independent? Thanks.
Well, thank you for your two questions. We did not the matter of stimulation. We did not discuss the matter of stimulation, and we certainly rallied around the statement that is in the monetary policy overall statement, that we will take the appropriate monetary policy stance and decisions in order to make sure that we deliver on our commitment to reach target 2% medium-term sustainable. So obviously the degree of appropriateness will be measured and exercised through these two principles: readiness, agility in the face of the uncertainty and the multiple decision points that are external factors, and which for some of them constitutes new shocks that are facing the European economy. On your latter point concerning the independence, you know that within the euro area and within Europe, it is particularly important. It's actually one of the criterias that are used in the convergence assessment that applicant new members have to go through. So if a new member who applies to join the euro area does not evidence the independence of central bank, both in its legislative foundation and in its operations, that's an obstacle to joining the euro area. So for us here, independence of central banks is fundamental.
And the next question to Jean-Philippe Lacour of Agence France-Presse, AFP. Jean-Philippe, please.
Thank you for asking. Bonjour, Madame la Présidente.
Bonjour,
I'll switch to English, of course. I just want to recall history on these trade tensions. In 2019, so your predecessor, Mario Draghi, stood here and said there are major downside risks in the face of US-China trade tensions at this time. And in September, ECB responded with a stimulus package. My question is, given the broader conflict that we are facing, is it now just maybe a question of a matter of time before ECB will take further actions in response to these tensions? You told us about readiness and agility, so we are maybe curious.
You doubt it?
And the second, more broadly, questions. Since 2022 in February, the ECB have repeatedly condemned the Russia aggressive and unjustified, quote, unjustified war against Ukraine, and you did it today in your statement. How would you characterize this war trade war now that has been launched by Trump against economic partners? Because you talk about tensions, but we journalists, we call spade a spade. It's a trade war. So how do you characterize this kind of other war? Thank you.
On your first point, we will determine our monetary policy stance on the basis of what is appropriate in order to reach our target. We will do that demonstrating effectiveness and agility. So, analyzing the nature of the shock, the kind of responses that it requires, and doing so in a prompt manner. The downside risk are clearly stated. If you look at the paragraph, now you don't have it because it's not yet on the web page, but I read it for you earlier on. But the downside risks are clearly identified in relation to growth. Will those risks materialize? When do they materialize? Will be a factor of how decisions are made, which decisions are made, what trade measures will be taken, what countermeasures will be adopted, whether there is an escalation as a result. And as I addressed in earlier questions, what kind of rerouting will we be seeing? What measures will be taken to prevent this massive rerouting if necessary? What national and European fiscal decisions will be made over what course, what period of time. You know, when you inject 800 billion in the economy or near 1 trillion euros, it's not a small feast. It's a serious impulse, and it has serious effect, certainly on growth, and to be seen on inflation. But this will be for later and latter analysis when we have more information and more data on these particular matters. You know, I'm not going to characterize what's happening at the moment. I think that the commentators, the top-notch economists who specialize in trade matters all agree that it will have downside consequences. The consequences will differ depending on which part of the world you stand. And that really justifies the fact that monetary policy decisions are not going to be the same the world over. Thank you.
Next question for Stefan Reckius of Handelsblatt. Stefan, please.
Good afternoon, and thank you for the law. Hi. My first question is on uncertainty. You used various degrees of uncertainty in your wording last time and this time as well. Would you say that we are now past peak uncertainty now that tariffs play out in the open, or is it too early to tell? And my second question, if I may, is on the exchange rate, which I'm aware you are usually hesitant to comment on, but still the movements are so big you are even mentioning it repeatedly. So how would you characterize the recent movements in the exchange rate? Do you expect a stronger euro to last, or is it just a temporary episode? Thanks.
Thank you. Thank you for your two questions. I cannot tell you whether we are at peak of uncertainty. I cannot. There is a negotiation which is ongoing. Players around the tables have stated their position. Proposals have been made, at least on one side, but all of that could change. There's a degree of unpredictability which adds to the uncertainty. And you know, if you add to that the incredulity that we've had, certainly in the first phase, where it was difficult to assess and understand, because it was such a break from previous sort of conventional wisdom as to how trade relationships are organized, as was discussed by the WTO yesterday, that I don't know whether we are at peak. What I know for a fact is that the European Central Bank and the Euro system, in our monetary policy decisions, we have to stand ready for the unpredictable. which is why I think it makes a lot of sense to be ready, to be agile, to work on reliable data, and to operate on a meeting-by-meeting basis. We meet about every 6 weeks. Think about the number of changes which have taken place in the last 6 weeks. There could be more changes in the next 6 weeks. But that's in the nature of our job, to stay focused on our mandate, to analyze what is coming at us, and to draw conclusions in order to make the appropriate monetary policy decision that will take us to target. That's what we will do, and we're not going to move away from that. You asked me another question on the exchange rate. Okay, so we are not targeting any particular exchange rate. You know my answer, I've given the same answer 1,000 times here. But we do mention, and we do refer, I think it's in the risk assessment, in the second paragraph, where we say, increasing global trade disruptions are adding more uncertainty to the outlook for euro area inflation. Falling global energy prices, that's one, and an appreciation of the euro could put downward pressure on inflation. So we do mention it because of the occurrence, the magnitude, and we try to account for it in the assessment that we make of our monetary policy decision. This is what happens. I think I've answered you 2 questions. Thank you.
Next question goes to Andres Stumpf of Expansión in Spain. Andres, please.
Thank you. 2 questions for me. Does your inflation analysis contemplates Europe retaliating at any point, or you don't speculate about these things? And I mention this because I'm especially worried because digital services could be targeted, and I know you're always very attentive to the service element on inflation. And my second question, it seems the ECB will be diverging again from the Fed. What are the main differences here and there and at both sides of the trade war that could allow you to keep lower interest rates and not Mr. Powell? Thank you.
Well, thank you very much. You know, we have a methodology to take into account developments, and the level of scrutiny is high, whether it is completely legislated or so certain in its outcome that we can actually take it into our exercise and the analysis that we do. When we are not too sure, we constantly do some scenario analysis to assess and estimate what the impact would be of such or such other decisions. And that exercise will be intense in the next few weeks, and will, give rise to some very serious results at our June projection meeting. As I said, thanks to the, consolidated exercise between NCBs and ECBs. But currently, if you ask me about the countermeasures, they are not included in the sort of baseline that we have. And obviously, we look at the entire trade balance. We look at goods, we look at services. This is pretty obvious to anyone. We cannot look only at goods or only at services. So I do pay attention to services, but I look at goods as well. The two are intrinsically the outcome of the economy and the trade movements that we have with other parts of the world. So I look at both. I think each central bank in the world does its job in good conscience on the basis of its mandate and on the basis of the currency that it is in charge of and the territory in which it has competence. So that leads us to look at the euro area, not in isolated form, because we are open to the rest of the world and more open than many other economies, including the United States for that matter. But we look at that, we are focused on the euro, and we are focused on our price stability mandate. The Other central banks in the world have different mandate. They have a dual mandate for some of them, and clearly the macroeconomic situation is different, and they will be on the receiving end of a different nature of shocks from the shocks that we will be receiving. So that leads us necessarily to drawing different conclusions. You know, it is a different situation. Thank you.
That brings us to the end of our press conference today. Thank you very much.
Oh wait, because I wanted to mention something that nobody asked me about, and I want to. Sorry, Wolfgang, but I want to call your attention to one particular segment of our monetary policy statement that you will see, which we have debated and which actually is a clear message from us, central bank, to the other European institutions. And this is the paragraph which sometimes is considered as sort of business as usual, or of course they do refer to this and this and that. This time around, we do specifically mention, with a special timetable associated with it and the swift implementation that we expect, there are three categories of structural efforts on the part of Europe. One is the competitiveness compass, which is a derivative of the Draghi report. Number two is the investment and saving union, which I've repeatedly called the capital market union. And number three is the digital euro. I think we've taken the view that this is a moment for Europe to not only be solid on its monetary policy and not just for us to deliver on price stability, but for the Europeans altogether and the European institutions to actually focus on what opportunities there are, what changes need to take place, and at which accelerated pace this should happen. So that's a strong message from us to colleagues, friends, and other decision makers in Europe. Thank you very much. That's all.
We see each other again, if you want, on the 5th of June.
Oh, happy Easter to all of you.
Exactly. Thank you. Bye-bye.
That was ECB President Christine Lagarde wishing you a happy Easter. This is Open Interest. I'm Matt Miller alongside Danny Berger. And let's bring in right now Bloomberg's Lizzie Burden. She is live in Frankfurt at the ECB. So aside from a 7th cut since June, what did we learn, Lizzie?
Yeah, the focus more on the words than the action, because the cut was very much priced in today, given Donald Trump's tariffs. Look, we know that now this was a unanimous decision. Even the archhawk Robert Holtzman got on board with this cut. Nobody wanted a 50 basis point cut. That's interesting, even though it was mentioned. They, she says, rallied around the 25 basis point cut. And Christine Lagarde, again, repeated this emphasis on uncertainty, as you would expect, but we really were looking for clarity, Matt. She said that tariffs are a negative demand shock, the downside risks to economic growth have increased, but the net impact on inflation is basically to still be seen. So leaning dovishly, and that's how the markets have read it. You've seen euro-dollar falling, although those bets, that fall paired somewhat while she was talking, but simultaneously traders boosting bets on ECB cuts ahead. So now they're pricing 3, including at that June meeting. But the most interesting thing I have to say today out of all of this was that they dropped the language that policy is restrictive, but they didn't make clear if rates are now neutral. So asked by our reporter, Jana Randau, what we meant to take from that, she said that neutral as a word is just meaningless at this point because there are so many shocks. So there's no point talking about neutral and restrictiveness given all of this uncertainty. So effectively, they want to keep their options open.
All right, very interesting stuff, Lizzie. Thanks for that roundup. Lizzie Burden reporting live from the ECB in Frankfurt, talking about the now, I guess, uselessness of words like restrictive and neutral. Let's get a quick check on what's going on in the major averages. Here in the U.S., we do see some green on the screen, but not much. The S&P 500 right now up 8 points to 52.84. So after the drop of more than 2% yesterday, we are even further below the 200-day moving average than we were. The NASDAQ about 0.1%. I wanted to include the Dow Jones Industrial Average here, which we often don't because my co-anchors are so much younger than I am and don't care. But they're out today. So the Dow Jones Industrial Average off more than 500 points. And the reason you see a much bigger drop here than than any drop on the S&P and the NASDAQ is because United Health is weighted so much more heavily on the DJIA. It's worth almost 8% of the Dow Jones Industrial Average, and it's off almost 20%. So that's why you see that drop. In terms of the other stocks that we're watching, NVIDIA, obviously a big heavy mover, and it's down about 1.5%. After a huge drop for chip stocks yesterday. This was up a little bit in the pre-market, and as it falls further, you may see the S&P 500 drop as well, because NVIDIA is worth, I believe, 6% of the S&P 500 and maybe 9% of the NASDAQ Composite Index. Taiwan Semiconductor gaining 2.33% after it maintained a bullish growth outlook and denied a potential tie-up with Intel, and as a result, Intel is down 1.6%. Now I will introduce really my co-anchor filling in for Katie and Shonali. Do you care about the Dow?
I feel like you've kind of implied that I am not youthful because I care about the Dow. So I'm a little bit offended this morning, but that's okay. I do care about the Dow, Matt, and it is because of United Health this morning. Look how much it is down in this market, down 18%. It's cut its outlook on care costs. Mizuho analysts writing this morning that we might start talking about a management shakeup at that company because they were just so caught off by surprise. On the other side of things, Eli Lilly is posting positive results for its weight loss pill trial. Matt.
I will say that, Katie and Shonali are much more likely to watch the Russell 2000. They care a lot about the small caps, and they're doing better than the S&P.
I could argue that the Russell 2000 doesn't matter anymore anyway. All those companies have been taken private. What's left is not representative of small businesses. So there you go. There's some fodder for you next time, Matt.
All right. We'll continue to have this debate on open interest. Right now, I want to get to, well, it's really been a turbulent week for markets, and especially for Fed Chair Jerome Powell. He faces more pressure to drop interest rates now, but earlier this week, Treasury Secretary Scott Bessent had this to say about the end of Powell's tenure, which, don't forget, is scheduled still for more than a year from now in May of 2026.
Well, we think about it all the time. I think when are we going to start the interviewing candidates? And that'll be sometime in the fall.
Yesterday, Powell's comments were part of what tanked the markets, added to Trump's curbs on NVIDIA exports, when he had this to say about monetary policy.
For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks.
Now, today, President Trump lashed out at Powell, saying his termination cannot come fast enough. Bloomberg's Tyler Kendall joins us from the White House with the latest on these tensions. And Tyler, we know that President Trump wants Powell out, but we were calmed, I think, to some extent by Anne-Marie Horton's interview with Scott Bessent when he said, we're not going to start interviewing candidates until the fall. Is he out sooner?
Yeah, hey, Matt. Well, that's the question here. And of course, there's legal questions. Jerome Powell himself says that he doesn't think that Trump has the legal authority to fire him. And while President Trump has long been critical of Jerome Powell, this would appear to mark an escalation, at least in the rhetoric. Still some big interpretation questions here. Was President Trump pointing to the end of Powell's term as chair in May of 2026, or was he instead calling for the Fed chair to be fired outright just one day after, as you heard, Powell's comments suggesting that the central bank will have less flexibility to cushion the economy amid the tariff fallout? President Trump has often cited that he thinks his tariff policies go hand in hand, he likes to say, with lower interest rates. And we should also note that senior administration officials here at the White House have often downplayed President Trump's criticism of Powell in the past, saying, look, this is his opinion, and that the White House respects the Fed's independence. But we'll have to see if any of them come out with a more stronger stance, perhaps now that the word termination is being thrown about. You mentioned Treasury Secretary Scott Bessent, who told Anne-Marie on Bloomberg Television earlier this week, he thinks that monetary policy is a sacred jewel box that needs to be preserved. We should just note for context, President Trump in the past has indicated that he would let Powell serve out his term, but there are big questions, Matt, about the future of independent regulators here in Washington, particularly after the administration has moved to fire some of them, such as last month 2 FTC commissioners.
All right, Tyler, thanks very much. Tyler Kendall reporting live from the White House. Now let's get back to the markets. Joining us here in studio is BlackRock's global CIO of fundamental equities and portfolio manager of the BlackRock Large Cap Value Active ETF, Tony DeSpirito. Tony, great to have you here. And before we get into, obviously, the large cap value ETF is one that you manage, so you're looking at that universe. But what do you think about this small caps debate? If you had a dashboard with only 3 U.S. equity indexes on it, what would you choose?
So it'd be the S&P 500, Russell Large Cap Value, and Russell Large Cap Growth. And sorry on the small cap, but if you look at the total market cap of the Russell 2000, it's roughly equal to the largest market cap company in the U.S. Tells you how it's become less relevant over time.
I think you have a different board now. I think
Yes.
you need to shake things up.
We should pull those up. I'll tell Joe in the control room if you could pull up the Russell Large Cap Value, Russell Large Cap Growth, and the S&P 500. That'll be our dashboard from now on.
Can I ask you how instructive value is at this point? It's typically something that's a little bit more cyclical. You need a growth upswing for it to happen. What is the case for value right now?
So I think that's a misnomer that value has to be cyclical. In fact, I've studied a lot of value cycles over history, value versus growth, and I would say roughly half the cycles value cyclical and half of the time it's not, right? So we all know in the GFC, value did not protect you on the downside, but guess what? In 2022, it did. But when I look at the portfolios I run, I actually run a fairly low beta portfolio in contrast to a lot of value managers. So our portfolio tends to do well and outperform in periods of downturns, and that's because we do have a focus on dividend and, more importantly, dividend growth, and those kinds of stocks prove to be more resilient in tough markets. So I really think it's what is your flavor of value, and that really determines how protective you are on the downside or how cyclically oriented you are.
You actually put, I think, a very interesting fact in your notes, which I wanted to mention. You track value versus growth over the last, I guess, 25 years, right, since the turn of the century. And I think they've changed leadership 28 times in that period. But over the past quarter century, they've performed sort of equally. How do you think that works out? Is it just that they're great diversifiers for each other?
I do think this is a really important point, diversification. Particularly if you look over that 25-year period, in the most recent period, growth has had an incredibly strong run versus value. And what that's meant for investors is that their portfolios are likely out of balance, meaning growth has done really well, better than value, and so their overall growth weighting has probably gone up, not just in their portfolios, but in the indices as well. So we track the S&P 500 over time, and what's the value component versus the growth component? It's way tilted towards growth today. So I think it's really important that investors look at their portfolio, and if they are overweight growth, to get back into balance with value. And those who have done that already have really benefited this year, for example, where value's had a nice comeback so far.
Does that mean if we are near something of the end of the selling that we've seen recently, that what leads us out isn't the playbook that we're used to? It's not going to be tech. It's not going to be those high-flying growth names. That it is going to be value-oriented stocks that leads this next leg higher once we're out of this period, let's call it.
Well, I definitely see the market broadening out for sure, and that's probably good for value. If you look at the earnings growth rate, take of the Mag 7 as a proxy for tech and growth. If you look at 2023, the earnings growth rate of the Mag 7 versus the next 493, the gap in earnings growth rate was 40 percentage points. That's enormous. Throughout 2024, that started to moderate. This year, if you look at estimates, should be high single digits. Next year, even lower. Despite that, despite the converging of the earnings growth rates, the valuation gap is as large as it's ever been.
How do you define value to people that maybe aren't in the market, or even someone like me when I'm asking this question, right? Growth is pretty easy to understand. It's the shooting star on the matrix. But value is much easier to fall into a trap, right? It could be priced for a reason. So what do you look at when you're putting a stock in the BCLV?
Yeah, certainly when you look at the indices, they're just going to look for statistical value, low PE, low price to book. But as you point out, that can be a value trap, right? Just looking for stocks that look cheap. You really need to see stocks that have good earnings opportunities and that whose stock prices are low relative to that. That's where the fundamental research comes in. And it's interesting, if you look at, I think that's an advantage of being at a firm like BlackRock is, I sit right next to the growth manager, right? And so I have the growth manager whispering in my ear about companies that are being disrupted. And half the game in value is avoiding that disruption. So I think that's a very important aspect.
Tony, it was so great to talk with you today, and thank you for settling the debate that you should be looking at neither the Dow nor small caps. Both horrible indexes. Thanks so much, Tony. That's, of course, Tony DeSpirito of BlackRock. All right, lots of news in the chip world today. TSMC keeping its bullish outlook for 2025 despite tariff uncertainties. At the same time, NVIDIA CEO Jensen Huang is in Beijing today, just about a week after meeting with President Trump and after the U.S. barred sales of NVIDIA's H20 chip to China. Bloomberg Technologies' Ed Ludlow joins us now. Ed, let's start with NVIDIA. What signal should we take from Jensen Huang in Beijing?
Well, let's be completely frank. It's very normal for Jensen Huang to go to Beijing. NVIDIA has a sizable footprint in terms of employees in that country. He visits them specifically more than once a year. He's not wearing his leather jacket, according to local media reports. He's in a suit, and the Chinese news agency is reporting that he met with the vice premier. So, it's hard to draw a sort of causal link between the news on the license requirement. That's the basic thing that I want to clarify. The US government is not saying that H20, this chip that NVIDIA designed for the Chinese market, is illegal or that it does not conform to the parameters. What the US government said yesterday is that NVIDIA needs a license. And what we're inferring is that because they opted to do a $5.5 billion write-down on inventory of H20s, they have not yet applied for or are not going to apply for a license, hence why they had to address on paper the cost of the inventory. So what happens next, who knows? But the timing is timing, Danny.
Ed, can we just talk on air about something you and I were messaging about yesterday, which is that in my mind, it doesn't matter if the U.S. puts H20 export curbs on NVIDIA because the Chinese Communist Party has already advised companies not to buy these chips. And maybe a little bit differently than how things work in the U.S., when the Chinese Communist Party advises you to do something, in China, you do it, or maybe you disappear.
Historically, yes. You're referring to the Chinese National Development and Reform Commission. And the edict or the advisory that they gave to their domestic technology buyers of NVIDIA's equipment was, we don't think this conforms to rules that largely stem from energy, raw materials, and supply chain composition requirements. But I think it is an advisory. What we know is that very large Chinese technology companies, Alibaba, Tencent, ByteDance, were the biggest buyers of H20. I think we also know that they had built up inventory of that technology and already had them. So, now the accessibility is not there. But I can't remember if we discussed this on the show yesterday. A side effect of this policy from the United States is if they can't use H20, what are the options for those Chinese tech names? Well, Huawei has a very similar AI accelerator. And so inadvertently, China now has this sort of opportunity to champion its domestic option, which those tech companies may well look at.
Ed, great to get time with you. As always, Bloomberg's Ed Ludlow, a tremendous resource for technology and rocket news, and you can watch him every day at 11 a.m. on Bloomberg Technology. Now let's take a look at what's going on in United Health. The stock has posted a massive plunge after cutting earnings outlooks for this year. Its earnings outlook for this year, you can see here, off 20% in the cash trade right now. Here with more is Bloomberg's Damien Gard. So Damien, just tell us what led to this. I mean, they've lost a fifth of their value in today's trade alone.
Yeah, so United missed its quarterly earnings estimates for the first time in more than a decade today, which is staggering in and of itself. But I think what we're seeing in terms of the reaction is largely that this is perceived as an ominous sign for this entire sector, the health insurers and managed care organizations, because United is the largest and most complex and is perceived as kind of a bellwether. And then you have on top of that the growing concern about basically how the government is cracking down on Medicare Advantage plans, which is a huge part of United's business. It's a massive part of basically healthcare in this country. We've seen those things coming into pass over the past year, and then we saw Dr. Oz, who is the incoming head of the government agency that runs Medicare, in his Senate confirmation hearing, taking a really fiery stance on some of the stuff that United really counts on to make its business. So there is just compounding concern about not only this company, but that sector at large.
Timmy, less than a minute here, but Eli Lilly, opposite side of the trade, up more than 16%. What do we know about their weight loss pill?
Yes, so Lilly had basically picture-perfect clinical data from an in-development pill that would match what we see in injectables like Ozempic, but obviously with a daily oral medicine, which is kind of the holy grail product in this market. Now, these results don't guarantee that Lilly's going to run away with blockbuster success, but this is what investors were looking for from this readout. And so I think we'll just continue to see strength in Eli Lilly in the years to come.
All right, Damien, we're going to continue to obviously have you on because these companies are making big news, and we're talking more and more about pharma as we get into these tariffs. Bloomberg's Damien Gard covers United Health and the pharma industry for us. Let's take a look at what's going on in markets right now, because very little change on the S&P was what we saw right out of the gate at the open after a 2.25% drop yesterday. But we're starting to see these indexes climb a little bit. The S&P now up 0.5%, the NASDAQ gaining 0.5%, and we've added the small caps back in. I don't know why, because Katie and Shanali aren't back yet.
Justice for small caps.
They're up 0.75%, even though the entire index, as Tony DeSpirito just told us, is worth the same as one stock on the S&P 500 index. This is Open Interest.
Are you worried about your orders because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person to not manage that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments. And so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks, the epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected,
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The Dow is down more than 1% at the open as investors brace for possible fallout from President Trump's warning about Fed Chair Jerome Powell today and his assessment of Trump's tariffs. Correspondent Nancy Cordes.
This morning, he posted that Powell should have lowered interest rates a long time ago and that his termination cannot come fast enough.
Legal experts like constitutional law professor James Sample question whether the president can fire Powell.
No president in American history has ever tried to remove a member of the Federal Reserve's board, let alone the chairman.
They're making progress on power outages in Puerto Rico after electricity was knocked out to the entire island yesterday. Correspondent Manuel Bojorquez is in San Juan.
I am here to work out in the dark.
Puerto Rico went dark once again. The island-wide blackout led to gridlock on the roadways starting Wednesday afternoon when traffic lights shut off. By nightfall, some areas were pitch black as people drove through dimly lit streets and others dined in the darkness.
People slimming down with the help of Eli Lilly's popular weight loss injectable may be able to say so long to needles soon.
Lilly already makes the injectable weight loss drug Zepbound and Mounjaro. Its new daily pill works similarly with similar results.
About 16 pounds by the end of the trial on average, after about 40 weeks.
CBS News medical contributor and editor-at-large for public health at KFF Health News, Dr. Celine Gounder, says if future trials go well, the pill could become available next year.
Lilly has already stockpiled over 1 billion pills of this new pill in advance of the demand.
Michael Wallace, CBS News.
Eric and Lyle Menendez have been set to attend a resentencing hearing today at court in L.A. Whether that will happen is unclear after the district attorney made a last-minute request for a delay. Legal contributor Caroline Polisi.
Just last night, the district attorney's office asked to delay the sentencing because Gavin Newsom had asked the parole board actually to initiate a risk assessment of the brothers should he decide to grant them clemency.
They've been serving life for their parents' 1989 murders and claim they suffered years of sexual abuse. Easter pilgrims disappointed when an archpriest at St. Peter's Basilica presided over Holy Thursday Mass.
We were hoping to maybe have the experience with Pope Francis and whatnot, but, you know, his health's priority, and it's still been an amazing experience.
The 88-year-old Pope is still recovering from double pneumonia. The Dow is down 440 points. NASDAQ up 61. This is CBS News. Have you heard? 70s, the new 50?
The International Monetary Fund says its 41-nation study shows that someone aged 70 today has the same strength and cognitive function as the average 53-year-old in the year 2000. Well, yes, says demographer Paul Moreland, but he says most of that improvement's been in poor countries.
Where people died young, people got unhealthy young, and they've caught up.
He says fitness and cognitive gains in the wealthy world have been more modest. Vicky Barker, CBS News, London.
The first party was such a disaster, it became the subject of a Netflix documentary.
Desperate people do desperate things.
Now the fate of Fire Festival 2 is up in the air. The official website has posted a notice. The event scheduled to begin May 30th in Playa del Carmen, Mexico, is postponed. No comment from the organizer, Billy McFarland, who served almost 4 years in prison for wire fraud in connection with the 2017 event in the Bahamas. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Brokers Studio in New York City. To our worldwide audience, we are streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live. That's where you'll find us. Alex Steele is out today. Emily Graffeo sitting in again. Thank you, Emily. Appreciate that for the next couple of hours. Riding shotgun here. A lot going on in the marketplace. We've got a kind of a mixed tape out there. We'll get to that in just a moment. Ira Jersey, Bloomberg Intelligence Chief U.S. Strategist, is going to join us to get a sense of what we're doing with the Fed. And President Trump saying Powell's termination can't happen fast enough. So getting a little political there with the Fed. We'll see if that's impacting the markets at all. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex, can give us her market call here. Hugh Worthington, Bloomberg Intelligence European Rate Strategist, ECB, cutting rates again today in Europe, and also talking about another rate cut in June. And then Gene Munster, to me, one of the top technology analysts on all of Wall Street. He's going to be joining us here and get us a sense kind of where we're going here from the tech space in a very uncertain world with tariffs and the uncertainty from an economic perspective that brings. So we'll have a lot coming up here. First, let's go right to Lisa Mateo with the Bloomberg Business Flash.
You got it. And this Business Flash brought to you by IBKR. Financial advisors, you can switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. Learn more at ibkr.com/RIA. Well, we've got stocks mixed this morning. Traders kind of looking through the latest batch of earnings and the reports from United Health. Well, that was just tough for them to digest. Of the 11 major industry groups, it's contributing to the biggest drag. Its shares right now, they're down about 19%. It cut its earnings outlook for the year, reported first quarter earnings below estimates. That's pulling down shares of Elevance Health, down 5%. Humana down nearly 8%. Other stocks on the move, we have Hertz up nearly 30%, 29% right now. This is after surging 56% yesterday at the close. The reason for all this is a report from CNBC that Bill Ackman's Pershing Square Capital Management has taken a nearly 20% stake in the company. Finally, shares of Eli Lilly, they are on the rise, up 14%. This is after positive phase 3 results for an experimental weight loss pill, and that has shares of its rival Novo Nordisk lower. Its ADRs are off about 8%. So we check the markets all day long. Let's get right to it. The S&P 500 up 0.2%. We have the Dow off about 1%. The NASDAQ is little change. The 2-year yield at 3.76%. That's little change. And the 10-year yield, 4.29%. That's up 1 basis point. To commodities, gold falling after hitting a record. Right now we have COMEX gold at $3,325 an ounce. And we have oil rising for a second day. We have Brent crude at $66 a barrel. WTI crude $63 a barrel. The Bloomberg Dollar Spot Index is little change. And the euro right now down about 0.3% at 113.61. That's after the ECB lowered interest rates for the 7th time since last June. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Emily and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Graffeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You know, Emily's got a day job, folks. She's actually a reporter for Bloomberg News. She's fact-checking a story. I don't know what that is. I think you learned that in journalism school. I'm going to give her a few minutes so she fact-checks.
I actually saw an incorrect fact, so thank God we didn't publish this.
You did. So very good.
This is why we fact-check, Paul.
All right. So let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
United Health shares are sinking almost 20%. That's the most since at least March 2020. I try to go to since go, Paul, actually, and it's way more than that, but I'm not sure, so I don't want to say it out loud, but we're definitely sure it's the most since at least March 2020. So the company cut its annual forecast and reported its earnings miss. That's the first time in more than a decade. So this is a foreboding sign, and majority of the health insurers in that same sector are plunging. United Health said it was blindsided by rising medical costs as the first quarter closed, and this appended a forecast that it gave just 3 months ago. The guidance cut is rare, actually, for United because they typically forecast conservatively, and they often raise their outlook as the year progresses. So definitely people are spooked here. We have TD Cowen saying that the, quote, ominous results cast doubt on the forecast of every insurer.
I mean, is this a UNH thing? Is this an industry thing? Because, again, this is a company that kind of just under-promises and over-delivers.
Exactly. That's why I think it's scaring a lot of other companies in the sector. And it's had a tough year. We have that killing in December of the top executives.
Right.
So it's definitely a bumpy ride so far for United Health.
All right, what else we got? Eli Lilly, this is not a small little biotech stock. It's a 14%. This is a monster market mega cap stock.
Definitely, and it's rising the most since August 2023. Shares surged because they showed its experimental weight loss pill worked as much as Ozempic did. And that brings the company one step closer to a needle-free alternative. I mean, a lot of people say that they're not taking those weight loss drugs because it's an injection. So if it's a pill, it's really a game changer. And that's how they're seeing it too. So the trial is one of the Lilly's running test of the drug called orforglipron. Let's try that again, orforglipron.
I like it.
So it basically aims to heal diabetes, obesity, and other conditions like sleep apnea. And again, the fact that it's not an injection is a big thing.
You know, I apply the injection to someone on a weekly basis. It ain't no big thing.
Really?
Yeah, it's no big thing. So, but the pill would be like 1,000 times better.
I'd rather be the receiver than the injector, I think. It's scary.
All right, what do we got from Spirit Airlines?
We are actually changing it to TSMC, so ADRs are edging slightly higher, and that's after the chip maker kept its bullish outlook for growth in 2025. So this suggests that the world's biggest chip maker is confident that it can ride out this U.S.-China trade war, which is a big deal, and this is really what's spooking a lot in the market. So this is a big thing that TSMC said that, and it also kept its growth outlook for 2025 on expectations of AI revenue doubling. We have Bernstein saying, you know, this outlook, it keeps the narrative intact, but it does not provide much cushion for possible tariff impacts.
Yeah, I don't know. I'm surprised they actually put out that number. You know
and that they're very optimistic.
Yep, very good.
But maybe
All right,
they're seeing
Isabel
something.
Lee. Good stuff. Appreciate that. Isabel Lee, Cross Asset Reporter here. All right, this morning, President Trump posted on Truth Social that, quote, Powell's termination cannot come quickly enough, end quote. However, yesterday at the Economic Club of Chicago, Fed Reserve Chairman Jay Powell stressed the importance of the Fed's independence and its, quote, broad support across both political parties. So we'll get a little sense here from Fed Chairman Jay Powell. Let's take a listen to his comments.
Our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So, you know, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties.
All right, that was Fed Chairman Jay Powell speaking at the Economic Club of Chicago yesterday. Our own Michael McKee was there, giving us some live reporting there. But certainly, President Trump's tweet this morning got some attention from a lot of folks that look at the Fed and look at the Treasury market, look at interest rates and the U.S. economy. Ira Jersey joins us, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, I'm sure you've been talking to a lot of your institutional investor clients this morning. What did they make of the president's comments there on social media?
Yeah, I mean, a lot of people are just, you know, I think that there's a scapegoating going on, right? Like President Trump might say that, oh, I want to get rid of Jay Powell because I want to cut interest rates, but I think there's also an acknowledgement that in doing so creates certain risks to the economy. And I think from the administration standpoint, having a scapegoat on the economic outcomes is convenient, right? So if the economy does fall into a recession later this year, they can say, well, look, you know, they can point to this tweet and say, well, the president said that he was going to be too late, and in fact he was, right? And then if the economy chugs along, you can take credit saying that all of the fiscal policies that you're doing is supporting the economy. So I think that there's a political convenience here potentially that Jay Powell remaining in office can support the administration in some way in public opinion.
So, Ira, does Trump actually have the ability to remove Powell from his seat as the chairman of the Federal Reserve? And if not, how much longer is Powell there?
I'm not a constitutional lawyer. So right. Jay Powell probably knows better because he is an attorney. But there are some, I would suggest that folks maybe go look at some of Elliot Stein's work here at Bloomberg Intelligence, because he's been following this very closely as to the different court decisions that will lead to independent chairs and directors of independent agencies, whether or not the president can actually fire them, and what cause means. Like, how is cause defined? That's something that the Supreme Court is going to be taking up, and depending on how that goes will depend on whether or not President Trump does. Now, let me say from an economist standpoint, and I'm an economist by training, not an attorney. There's a vast literature on why central bank independence tends to have better inflation outcomes. Doesn't necessarily have better growth outcomes, but has better inflation outcomes. So the idea that you are going to take away the Fed's independence and have an executive branch, the executive branch, ultimately run monetary policy probably means that you're going to have monetary policy that's easier than it should be at certain times, and that means that overall you could wind up having inflation and prices running a little bit hotter than it would if you had an independent central bank. Now, does that mean that you get the 1970s style inflation? Probably not, but at the same time, you can have inflation running at 3.5% or 4% instead of at 2%. And I think that that's kind of a choice that both the courts, the American people, and the administration are ultimately going to have to make, even if Chair Powell can be removed for cause.
Ira, got about 30 seconds left. The ECB cut rates again today. If I'm President Trump, I'm saying, where's my Fed chairman? Why is he not cutting rates? Is that valid?
Well, a little bit and a little bit not. I mean, I think Jay Powell laid it out yesterday. And look, the Fed has two mandates. The ECB has one. The ECB's job is to make sure that you have stable prices. And if prices are falling and if there's other problems and growth is slipping, you cut interest rates. The Fed, and if you look at the U.S. economy right now, we still have 150,000 jobs per month. We still have rising wages. Retail sales weren't great, but they were fine. And so it's not obvious that the United States is slipping into a recession imminently. And I think that's the reason why the Fed is sitting on its hands, because it also doesn't know what inflation is going to do because of tariffs, and inflation expectations have been rising. If you just look at the University of Michigan sentiment survey, it shows, hey, maybe inflation expectations are way too high. So if you're the Fed, you have to balance those two mandates.
Ira, thanks so much for joining us. Appreciate it. Sorry about your Aston Villa team not making it. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. He's down there in Princeton, New Jersey. Got a mixed screen out there. The S&P's up 10 points. That's about 0.2%. The Dow's off 540 points. Most of that is from United Healthcare. That's a big component of the Dow Jones Industrials, and that stock is down 20% today. The NASDAQ pretty much unchanged on the day. In the rate space, rates are pretty steady. 10-year, about 4.29%, 4.3% on your 10-year U.S. Treasury. Gold actually a little lower. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got stocks mix, and this is after more earnings reports and more economic data. Let's start there first. Applications for U.S. unemployment benefits. Well, they fell to the lowest in 2 months, and that's showing signs of a stable labor market. Meanwhile, a warning shot from the manufacturing sector. The Philadelphia Fed Index that fell, trailing all estimates. We go to the stocks now. The NASDAQ down about 0.1%. The Dow off more than 1%. And the S&P 500 is up about 0.1%. We have the two-year yield at 3.76%. That's little change. And the yield on the 10-year, 4.29%. And that's up 1 basis point. To earnings we go. We have shares of Charles Schwab. They're up about 3%. Daily average trades exceeded expectations. As for Blackstone, its shares are rising. They're up about 1.5%. Its CEO actually urging a swift end to the tariff turmoil. Deal exits are slowing. And finally, American Express, their shares down 0.2%, despite it maintaining its full-year guidance for revenue growth and for profit. Later this afternoon, we're on to Netflix. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Emily Grafeo, she's sitting in for Alex Steele. I'm Paul Sweeney. We are here in our Bloomberg Interactive Broker Studio in New York City. It feels like spring today in New York. That's a good thing. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast now. Let's check out with our next guest, Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex. Katie, I'd love to just get your views, how you've digested the last several weeks in these markets, the volatility, the sell-off in equities, the movement in the bond market, the weakness in the dollar. How have you kind of recalibrated your outlook, if you have, going forward?
Yeah, we've seen a seismic shift in terms of where signals have moved. We just have to acknowledge that, going into this, positioning of trends was very different. And we've seen what has been a very aggressive equity sell-off. But what was particularly interesting to me is that you also saw in that sell-off, you saw some very different moves to what we usually see. So you saw yields actually rising, and you saw the dollar selling off. So it was not your typical crisis risk-off environment where sort of all risk assets sell off and the dollar tends to rally and bonds tend to rally. So I think for me, this is a moment that shows that we're kind of in a pivot point to what is the new normal, what are the new trends, and those are starting to develop, but still kind of in process, I would say.
When you look at the price action in equities, do we see signs yet of a capitulation, a bottoming out, or is it still kind of unclear what the next move is right now?
This is a good question because I think all market participants are asking themselves this exact question. Is this, sort of a pause before another leg of what might be a bear market trend? And when does that happen? Or is there something we can grab onto to regain some bullish views? And when you look at trend signals specifically, you're seeing sort of still a net but small short view in US and pretty close to flat but slightly positive in other regions. So I think the jury is still really not out in terms of where we're going. And I think that's why you feel a little bit of aftershock this week, sort of a holding pattern. You have some big days, but you have other days like today where there seems to be mixed results, like capitulation in some sense. Yeah.
So what do we do here? What's the conversation you're having with your clients these days?
So the conversations for us, especially in the trend space, is whenever there's a major catalyst or shock, you tend to see sort of a deleveraging and sort of adjustment of trend positions. And right now we're in the point where we're going to sift through the narratives and eventually figure out what are the winners and losers of this particular change in macro and trade policy. So I think for us, it's really about the next phase and sort of seeing which trends develop. And I think we're going to just have to keep getting more data and clarity on how trade discussions progress, what the ultimate goal of this is. And there could be great opportunities for those, certain sectors versus others in that wake.
What about when it comes to just positioning? I know that you study managed futures, CTAs, and those large investors were pulling back out of equities. What is the positioning telling you right now?
So an interesting point is going into this event, CTA positioning was moderate in the US and even short in certain indices. It was more the European and sort of other indices where they had more exposure. But what you really saw was a massive deleveraging and risk off move where, not just CTAs, but hedge funds, long-term investors really capitulated and said, I see this as a reason to sort of get out right now. And so I think just the magnitude of those moves, after those effects, you kind of see a consolidation, and a lot of people just don't have that much risk on the table right now.
Katie, thanks so much for joining us. Always appreciate getting a few minutes of your time. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex up there in Boston. We had some movement from the European Central Bank this morning, cutting rates again. I think the market's even discounting another rate cut in June. Hugh Worthington joins us, Bloomberg Intelligence European rate strategist. Hugh, what did you learn from the European Central Bank this morning and their actions?
Yeah, so we had on the face of it, they came out with their statements just about an hour or so ago, saying that they'd actually removed the idea that after today's rate cut, that rates were still restrictive, which is initially seen by some as being a little bit on the hawkish side, but actually the actual press statement and then the press conference itself very much focused on this whole idea of the huge amount of uncertainty that everybody's facing, in particularly in the face of Trump tariffs. And you've got to remember, the Eurozone runs about a 200 billion euro trade surplus with America, and the focus was very much on those. They just have no idea what's going on. They didn't feel they'd have a strong idea what was going on anymore by the June meeting, and as a result, as you say, now we've actually got ourselves to a point where, another cut which would be, I think, the sort of the seventh or eighth on the trot now, would be 90% priced in June, which seems pretty reasonable. And as a result, we had a situation where yields were sort of edging up on the day, and now you've got the two-year yield in Germany down 5.7 basis points in the day. It's sub 1.7%. So that's a pretty dovish outcome in the end.
Yeah, I wanted to ask a little bit more just about the reaction in the markets. I mean, U.S. yields are a little bit higher. I don't know if you're seeing any contagion of this ECB move into the U.S., or this looks like a piece of news that's just contained inside the EU.
I think it's the rate outlook in the EU versus America is enormously different. America obviously faces something possibly of a self-inflicted short-term inflation shock, but in Europe, I think the outlook is very different indeed. If anything, we're actually looking at inflation for last month came out around 2.2%, which is very close to their target of 2%. But if anything, things like energy prices, where they struck expectations for forecast for inflation later in the year, are now much lower than they were, both in terms of oil and in terms of things like gas prices. And if anything, the ECB is probably facing more of a deflation concern and undershooting their inflation targets later in the year, rather than what looks like possibly a very different situation in America. So we're looking at very different markets. Currently, and very different rate outlooks as a result.
All right, red headline just crossing the Bloomberg terminal right now. Philadelphia Fed names Chicago Fed's Anna Paulson as president. So a new president of the Philadelphia Fed. We'll have some more reporting on that in just a moment. Hugh, how concerned are the folks in Europe about this tariff policy coming out of the U.S.? The person on the street, and you're sitting in the pub tonight.
Sitting in the pub tonight, maybe the sort of people I go to the pub with, there's a lot of concern. But generally, in London, I would say people are probably looking at the moment, the headlines today, more about that they think that a trade deal with the UK is possibly 2 or 3 weeks away. I think a trade deal with Europe, though, is going to be a lot more difficult, because as I say, the trade with the UK is more or less in balance. But the problem you've got is in Europe is they run a 200 billion euro trade surplus with America. 100 billion of that is in Germany alone. So it is, I think people are much more concerned probably in Europe as to and the capriciousness of Donald Trump with those sorts of numbers that you look around as to how easy it would be probably to find a deal. And they definitely feel like that at the ECB. As I say, they've made it very clear at the meeting today that come the next early June meeting, they don't feel like they're going to be in any way better in any way, shape or form as to exactly where tariffs are going to be and what's going to hit them.
So what would get in the way of that final cut in June?
I don't think a great deal, to be perfectly honest. I mean, I can't see, a few weeks ago, everybody was focused on where do you think the neutral rate is going to be in Europe? And they were saying, somewhere between 1.75 and 2.25%. And the tone today's meeting was just one of complete uncertainty. You might as well sort of tear up the idea of where neutral rates could possibly be. People are adjusting their rate expectations down. I think you're probably looking at, as I say, at the moment, the market's pricing a rate of around 1.75% by year end, but they're also pricing about a 75% chance that could come down to 1.5%. And I think that seems, certainly, almost, well, it's our expectation. And I think that's where we are going to end up with rates, markets going to be pricing, by come that June meeting, I would have thought.
A couple of weeks ago, we were talking about Germany and some other European countries reinflating their economies with fiscal stimulus, infrastructure, defense. Is that still a story that you talk to clients about?
Oh yeah, 100%. There is a lot of fiscal splurge going to be coming, particularly in Germany, but it's going to take an awfully long time to put that together. That's not going to be a story really fully for this year, probably not even next year. It's going to be something which is going to take years and years and years. Now that may well be something that means that the outlook for rates could be a little bit more volatile, but really it's going to be sort of in years 2 to 3 onwards, rather than in the very short term. In the very short term, the impact is going to be there's very little growth around in Europe. The Bundesbank currently expects growth in Germany to be about 0.2% in 2025, and that's actually was cut from 1% just a few months ago. So I think the very short term, yes, there is going to be fiscal spending and infrastructure spending, but it's going to take probably this is going to be like a 9-10 year project, and it's going to take a long time for it to come through. It's not going to be coming through in the next couple of years that much.
All right, Hugh, thanks so much for joining us. Always appreciate getting a few minutes of your time. Hugh Worthington, Bloomberg Intelligence, European rates strategist. Again, some news coming out of the Philadelphia Fed. The Philadelphia Fed names Chicago Fed's Anna Paulson as president. Let's get some reporting on that from Katerina Saraiva. She's a Fed reporter for Bloomberg News. Katerina, what do we know about Anna Paulson?
Yeah, Anna Paulson has been the research director at the Chicago Fed since 2019. She kind of rose up in the Chicago Fed as an economist, very well respected economist in the Fed system. So I think this will be, pretty welcome news for a lot of folks at the Fed. As I said, she was research director since 2019 there. So she has attended FOMC meetings since then. So kind of will be a familiar face to folks.
What will Harker's legacy be as they step down from or leave this position?
Yeah, Pat Harker, was a really interesting addition to the Federal Reserve. He has a business background, and I think that can be really useful. There's often a lot of economists at the Fed, which is great. Obviously, that's needed, that deep understanding of how the economy works. But it's also useful to have folks like Harker who have more of that kind of practical background, kind of knows how businesses make decisions. That can be really important because he kind of brings that insight to the FOMC when they're making policy decisions.
What's the Fed, the Philadelphia Fed, what's kind of its focus? I know some of these individual Federal Reserve banks, they tend to have certain areas of expertise focus. Talk to us about the Philly Fed. How should we think about that?
Yeah, I mean, the Philly Fed, it's a really interesting area. It has obviously a lot of manufacturing in the Philly Fed. So that's something that they kind of, look closely at and do some research on. So it's just geographically kind of an important part of the country, especially right now as we kind of talk about the future of manufacturing in the U.S. So, I think we can look to them for research on that. And yeah, I think this is, overall a welcome development for the Fed to have someone who is so well respected kind of appointed to this position.
So the chair of the search committee and of the Philadelphia Board of Directors said that Anna has a strong commitment to the Federal Reserve's dual mandate of price stability and maximum employment, which doesn't tell us much about whether Anna is expected to be more dovish or hawkish. Katerina, do we know yet where Anna Paulson is going to lean?
Yeah, I think that's kind of a big question right now because we don't. Because her research has focused more on financial institutions, on the insurance industry, for example. She's done a lot of research into that. She hasn't done as much of the kind of work on inflation, unemployment, like those two parts of the mandate. So we don't have a lot of kind of public remarks from her on that. So it'll be really interesting to see. We'll have to kind of see in her first remarks how she leans. It's I think a bit of an open question.
So, Katerina, what did you and what are your sources? What are they saying this morning about President Trump's social media post about Fed Chairman Jay Powell that his reign can't come to an end soon enough?
Yeah, I mean, this is of utmost concern to markets and to anyone that watches the Fed. We had a lot of volatility in markets last week just because of the tariff news, and people are really on edge. So anything that could kind of exacerbate that or bring back those levels of volatility, people are really nervous about. And any sort of comments about something that threatens Fed independence really makes people nervous. If we were to see the president actually take action on that, on those remarks and try to fire the Fed chair, I think people, would be really concerned about what you might see in markets. That Fed independence is really has been a part of the U.S., of how we function here for a few decades now, and it's something that people really believe is necessary for an economy to function well. So people are nervous.
Right. All right, Katerina, thank you so much. We appreciate that. Katerina Saraiva, she's a Federal Reserve reporter for Bloomberg News. Again, the Philly Fed naming a new president, and we wanted to bring that reporting to you. Right now, let's get a little bit of a reset right here. We'll go to Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. We got stocks turning lower in this holiday-shortened trading week. The U.S. bond market closing at 2 p.m. Wall Street time today. That's ahead of Good Friday. But right now, the Nasdaq down 0.6%, 111 points. The Dow down more than 1.5%, 689 points. And the S&P 500 down 0.2% or 14 points. We have the 2-year yield at 3.76%. That's a little changed. And the yield on the 10-year, 4.29%, and that's up about 2 basis points. To commodities, we have COMEX gold lower at $3,304 an ounce. Over to oil, Brent crude up about 1% at $66 a barrel. WTI crude $63 a barrel. And the Bloomberg Dollar Spot Index is a little changed. Over to Bitcoin, down about 0.5% at just over 83,000. The chip industry got a much-needed boost. U.S. listed shares of TSMC, they're up about 0.1% right now. They were up higher earlier. It forecasts sales. The second quarter topped estimates. The company also kept its growth outlook for 2025 on expectations of AI revenue doubling. Then we'll stick with chips. Just days after the U.S. barred NVIDIA from selling those H20 AI chips to China, well, its CEO, he took a visit to the nation. Jensen Huang, he talked with the vice premier, also met with DeepSeek's founder in Beijing. If we take a look at NVIDIA's shares right now, they're down about 3.5%. And finally, Alcoa, that is the largest U.S. aluminum producer, It's said that President Trump's 25% tariff on metal imports has cost the company $20 million since the duties went into effect. Alcoa is down now about 6%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Emily.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Gilfredo, she's sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at a red headline crossing the Bloomberg terminal. Banks stuck with $2.35 billion debt for pet supply firm buyout. It's just another example of the capital markets not functioning well these days. The uncertainty we see in the marketplace, the sell-off we see in the stock market, the volatility we see in the bond market, it's having an impact on the capital markets. And we heard that from some of the big banks that reported earnings. They had a very, very strong first quarter in terms of capital markets, but the second quarter has been a little bit sticky there. Another headline coming across the Bloomberg terminal, Google partially loses U.S. advertising tech antitrust case. So that could be really material for Google. We will get further reporting on that as well. And let's just go right to, a great source there. Gene Munster joins us here, managing partner and co-founder of Loop Ventures. Gene, there's a million things we can talk about here. I'm going to put you on the spot a little bit, and if you want to pass, that's fine. But again, the Bloomberg headline crossing the terminal, Google partially loses U.S. advertising tech antitrust case. Any thoughts on that?
I think that they've lost cases in the past, and I don't know the context of what the scope of this is, but in general, when you see these losses, you see them being appealed, and I think that it probably would have a little impact on their business. I think that's just a general thread between the whole piece around the regulation, the antitrust, is that the bark is ultimately less than the bite. And so I think that from Google's perspective, antitrust is the least of the company's worries. I covered the company as an analyst for 10 years and was very supportive of it. When we started Deepwater, I was supporting the investment. We continued to hold it in our public fund. And we recently sold the stock. And it wasn't because of antitrust. It was because the search results page is still cluttered with AI overviews, sponsor links, then they're organic. You basically have this kind of 7th grade science project going awry when you look at the search results page. Very different than the generative results that I think still a small group, call it 300 million active daily people using generative search, generative bots to do search. So there needs to be this overhaul in terms of how Google monetizes. I don't think this is going to hit the business in the next 1 or 2 quarters, but I think that what the substance of this is that there's a major transition that Google needs to go through in terms of how they monetize, and I don't think it's fully priced into shares. So, Paul, my response is I think the antitrust is largely nothing, but I think there still is this very big question about how, as consumer behavior becomes more in tune to a more streamlined search experience, how Google is going to respond to that and continue to monetize in an effective way.
And Google, just for the news out today, the stock is off 2% today. But again, we've got a sell-off in the market, including the NASDAQ off about 0.4% here. So, all right, Gene, let's kind of think back. I mean, I'm just in the last week, we've had some of these chip companies kind of step up. I mean, NVIDIA sees a $5.5 billion hit from new Trump-China curbs on the chips. AMD sees $800 million charge from export curbs. Can you frame out kind of how you think about some of this tariff narrative as it relates to some of these companies that are really trying to fuel this AI, I guess, revolution, we would call it, in tech spending? How do you frame that tariff overlay onto the overall AI and tech story?
So the tariff piece, we have considered this starting, got the pace of it quickened early in April. We have to look back at what have we heard from the most influential companies, the companies that really have the pulse of what's going on in terms of the AI investment. What have they said since the tariffs have come out? And by my measure, there's been 5 positive data points and 1 neutral data point. And I'll start with the neutral data point, which is ASML this week. They missed their bookings number by like 15%. They guided June revenue down by 5%. They said that their AI part of their business continues to be healthy, but their other part of the business, ASML, makes machines that help make chips, not just AI chips, but any sort of compute chip. And that side of the business, they said, is being impacted by tariffs. And so that neutral data point, the reason why I put it as neutral is that if you really dig into what ASML is saying, they're saying that their AI business continues to be healthy. Similar comments from TSM last night, where they reiterated their guidance for calendar 25. They talked about AI. I know in the setup segment, you highlighted this, but the AI part of their business up 100% year over year. The street's looking for 55% growth from NVIDIA. And so that, to me, is a resounding endorsement that the AI investment phase is intact. And just to kind of round it out, on the positive side, we heard from, of course, Google, Microsoft, and Amazon a couple weeks ago saying that they're going to stand by their CapEx expectations despite what's going on with tariffs. We've heard from OpenAI more recently about how their user growth has quickened. At a recent TED 2025 talk, Sam Altman last week highlighted this exponential growth they're having in users. And Shopify is talking about any job that they have is something that they're going to need AI support for. So, Paul, putting it all together, there's basically the tale of two cities here. You have on one side, the market is in a funk and wants to believe that these tariffs are going to dramatically or measurably slow what's going on in AI. On the flip side, from the company's perspective, things seem to be intact.
Mm-hmm. So, Gene, how do you then kind of model out how much these tariffs and export curbs would actually impact companies like NVIDIA, like TSMC? I mean, an AI-related business doubling this year up to 100% just seems like such a large forecast, and it doesn't seem to factor in potential roadblocks.
So the way you model it out is you have an expectation of how this ultimately plays out. And from our perspective, we look at what some of the hyperscalers are saying. We also look at what some of the large enterprises are saying around AI, what their expected budgets are, and then we trim those back. So in the case of TSM, talking about that 100%, NVIDIA is not going to grow their AI business by 100%, but by trimming it back, that 55% number, to me, still feels conservative. So there is a guess related to how you model this out, but that's ultimately kind of what investing comes down to, is making a prediction in terms of what ultimately these growth rates are going to be. From our perspective, we think that the growth rates will remain higher than where the street is at today. So I'd say that's kind of a starting point in terms of modeling out some of the specifics. Just to put a finer point on your question on the trade restrictions, that's a little bit easier because we know which part of AMD and NVIDIA's business is going to be negatively impacted. It's about 3% with NVIDIA's business and about, I think it's 8% for AMD, or 11% for AMD.
Hey, Gene, we got about 30 seconds left, and this may be a little unfair. Is there a tech kind of Cold War between China and the West? And if so, how do you think about that?
Oh, it is a raging Cold War right now, and NVIDIA is at the center of it. And I think that's why you see Jensen moving over there now. And I think that both of these countries understand that AI I don't know from like a military perspective what analogy, probably a nuclear bomb. I mean, that's the strength that AI is going to have. They understand that, and that's why they're fighting so hard to maintain leadership.
Gene, thank you so much for your time. Always appreciated. Gene Munster, managing partner and co-founder at Loop Ventures. The reason we like to speak to Gene is he has such perspective on the global technology. He's been there covering this technology industry for the last 30 years. So they're at the birth and the development of the internet now in AI, and getting his perspective is very helpful to getting kind of handle what's going on out there in the news flow. The S&P 500 is absolutely unched on the day. The Dow's off 600 points. Thank you, United Healthcare. NASDAQ off 49 points. That's 0.3%. 10-year Treasury yields 4.29%. Pretty steady here this morning. We'll have more coming up. This is
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Emily Gaffreo sitting in for Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're streaming live as well on YouTube, so head over to youtube.com, search Bloomberg Podcast Live. I'm looking at American Express. They reported some numbers today. The second quarter, or their quarter came in a little better than expected. I think most importantly, they maintained their guidance here. That's important. Stock's off about 0.6% here this morning. Let's break it down. Ben Elliott, consumer finance analyst for Bloomberg Intelligence he's based down there in Washington, D.C. Hey, Ben, talk to us about American Express. How was the quarter, and what's the company management saying about business conditions?
Yeah, so they affirmed that guidance, Paul, but they put a big asterisk on it that said subject to macroeconomic conditions. So they were sounding a pretty optimistic tone, and they have good reason to. They have the strongest customers out there. They have a super prime base of borrowers. They have every reason to be confident, but obviously we haven't really seen any of the effects of tariffs yet. So any sort of slowdown isn't really going to show itself until the second quarter. But we did see a pretty sharp drop off in airline spending this quarter. Growth there was down about 10 percentage points. So that could be like sort of an early harbinger of what's in store. And it kind of shows you that even Amex's customers are not going to be totally immune from this.
That's interesting because I just had to book like 3 flights. I have so many weddings this year. And I was thinking, I wonder what this is going to say about the health of the economy. I mean, what else did we learn from these earnings when it comes to just what is it telling us about the direction of travel for the U.S. economy?
Well, so the earnings are mostly backwards looking, right? So really the only forward looking part here was that they sort of went and looked at their historical performance and they changed their model a little bit to increase their anticipated unemployment rate through the planning period. So, but even that resulted in a release of reserves, actually. So everything here points to optimism. And sort of the most important thing here is that even if revenue growth does slow for Amex, they have this gigantic marketing spend. They spend more than anyone else acquiring customers and providing those rewards that everyone loves about their Amex, and they can scale that back to sustain EPS even if growth slows substantially.
What are they saying about credit quality out there? Are they seeing any weakness there? Are they concerned about it going forward?
So, they do have the best consumer in the business, and everyone's FICO scores are much higher than they were pre-pandemic. Going back to the last financial crisis, sort of, one of they called it a boogeyman on the call today, was that FICO scores may not have reflected the actual sort of creditworthiness of the borrower. And so what we've seen during COVID from sort of these unusual circumstances is that FICO scores have risen across the board. So there could be, a case where at the margins, Amex is not underwriting adequately for inflated FICO scores. But, the impact to them would be the least of all their peers because they have such a high average weighted FICO.
It's interesting that you mention Amex potentially scaling back some of the credit card rewards because that's just something that, I associate with the Amex credit card. So when you look at these results, it says card rewards expenses up 16% year over year, $4.38 billion. So that is something that they would look at. They would look to trim that back, maybe to help their margins.
Yeah, so that's one sort of lever that they could pull. The bigger lever would be the marketing spend. And so when you're thinking about that, think about the 100,000 point sign-up bonus you get for getting a new American Express Platinum card. Those might go away if there were a deeper downturn, and that's sort of the biggest component of their spend, and kind of the easiest lever that they could pull to sustain EPS if revenue growth were to slow.
Hey, Ben, in your coverage of consumer finance, if you're going to see a weak consumer, a stressed consumer, which one of your companies do you think you'll see it first?
So there's a lender called Bread Financial, which used to be known as Alliance Data Systems, and they kind of come from the mall retail card legacy space. They do a lot of these sort of very interesting kind of lower FICO, sort of higher risk-adjusted return cards. That is definitely a call I'll be more interested in listening to. If there were going to be consumers who were looking ahead at the potential for tariffs to raise prices, raise unemployment, and to sort of pull back ahead of any of that damage actually occurring, I think it would be amongst their sort of customer base. But even Bread has seen improvements in their credit performance. So there's no reason to think that the damage has necessarily been pulled forward into the first quarter.
Just very quickly, what do you make of the market move today? The stock was down over 2%. It pared back those losses, but it's still in the red. Does that make sense to you?
Yeah, I think people looked at the slowdown in build business, the total spending volume on the network, and thought that might be a little bit of a harbinger of a slowdown. But then you get into the details. There was a leap year. There was an extra day in February. Basically, the results were strong. The momentum's still there. Management really struck a very optimistic tone. So I think it makes sense for them to sort of be where they are today.
All right, Ben, thank you so much. We appreciate that. Ben Elliott, consumer finance analyst, Bloomberg Intelligence. He's based down there in Washington, D.C. American Express reporting some numbers that came in a little bit better than expected. They kept their guidance, which, some people, you kind of call that a victory a little bit here in this uncertain world. But they did kind of, as Ben suggested, talk about a little bit of an asterisk there. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Satellite Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Research starts in just a moment. S&P 500 down 8 points. The Dow off 660. The NASDAQ off 94 points. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, the stock of the day, United Healthcare. Some disappointing results, some disappointing commentary on the business. Stocks down 22%. We're going to check in with Glenn Losev, Bloomberg Intelligence Senior Equity Analyst, is having a big impact on the Dow Jones Industrials. That index is down 1.6%, 600 points, in large part due to UNH. Vince Signorello, he's going to join us here. He's a Bloomberg macro strategist. Get his thoughts on the markets. What are the traders saying today? Then David Kudla, founder, CEO, and Chief Investment Officer at Mainstay Capital Management, get his thoughts for these markets. And Michael McKee's going to darken the door. We'll get his thoughts on Fed Chairman Powell. Does he have anything to worry about here, given that social media post from President Trump earlier? We'll get the latest reporting there. But first, let's head down to Washington, D.C. Amy Morris has got a Bloomberg Business Flash for us.
All right, thank you, Paul. Stocks are edging lower on this holiday shortened trading week. We do check markets for you all day long at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ down 0.5%, about 0.5%, and the Dow is down 1.5%. The 10-year Treasury yield at 4.29%, the 2-year yield at 3.76%. A reminder for you, the bond markets will be closing at 2 p.m. Wall Street time today. Google has partially lost its U.S. advertising tech antitrust case, the judge ruling that Google illegally monopolized some ad tech markets. That ruling increases the odds that Google will be forced to dismantle much of its ad tech business. Google shares now about 2% lower. United Health Group cut its annual forecast, reporting its first earnings miss in more than a decade, causing shares of major health insurers to plummet. The company attributes the miss to rising medical costs, especially in Medicare Advantage health plans and its Optum healthcare delivery business. They were affected by Medicare payment changes. Shares of United Health Group now 22% lower. Studies show Eli Lilly's experimental weight loss pill worked as well as the Ozempic shot in a trial. That brings it closer to developing a needle-free alternative. Shares of Eli Lilly soared on the news. Bloomberg's Damian Gard.
which is kind of the holy grail product in this market. These results don't guarantee that Lilly's going to run away with blockbuster success, but this is what investors were looking for from this readout.
Eli Lilly shares now 14% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Paul Sweeney and Emily Grafeo.
All right, Amy Morris, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Stocks in the red here. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, we'll start with some stocks in the green, starting with Schwab, Charles Schwab, ticker SCHW, right now up 2%. This comes after the company beat expectations in their latest quarterly update. The big thing, though, is this stands kind of opposite of what we heard from Interactive Brokers just yesterday. So we are seeing a company that right now is up, call it 2 and change percent-wise, was up as much as 4.5%. Net revenue better than expected, driving beats across most lines, according to some of the analysts looking through the notes. But overall, another strong quarter. But the big question going forward is, what does the market turmoil mean for some of these customers? Looking at some of the comments that the CEO was making, basically saying net new assets for Ameritrade clients growing, tracking towards the upper end of 2025 year-end scenarios. So expecting strong revenue and earnings expansion, two things that investors and analysts want to hear.
I mean, we talked to the Schwab people. Funds are still flowing in. They're retail clients. They've been buyers over the last several weeks.
JP Morgan put out a note saying, I think, north of $22 billion in total inflows and buying power since Liberation Day. So investors, retail, and the like are more than happy to buy Wall Street's dip with the long-term view.
I mean, Schwab has a lot of those like index ETFs that people just dollar cost average in even throughout the market downturns.
Yeah, it's about Eric Balchunas from Bloomberg Intelligence, who covers the ETFs. He's been talking about that. The flows keep coming in, and they come into the the big S&P index. So it's just amazing how the retail investor is resilient here. What else you got?
Yeah, looking at DR Horton in the home builder space right now, up 2.7%. Trades under the ticker DHI. Results, not that great. Revenue forecast missing expectations. Tough market for home builders. Obviously, you're dealing with the impact of tariffs and the uncertainty around that, given they source a good chunk of their lumber, I think about 20% through Canada. Obviously, we're dealing with a market environment that interest rates are higher. That's going to keep people on the sidelines from buying new and used homes. But looking, broadly speaking, maybe better than feared. Investors wanting to buy the dip, but not a huge move. We're talking about a stock that's still down about 14% year to date. So could be short covering, could be investors maybe betting that the bottom is in. But obviously, we are very much in an uncertain environment. And if you're a home builder, not really great if we do tip into a recession.
Exactly. All right, Google.
This is the news that I think anyone cares about, or is at least interested in. Google shares right now down just south of 2%. This coming after a judge ruled that the company was guilty of illegally monopolizing online advertising technology, markets for advertising exchanges, and ad servers. Second major blow for the tech giant that was already found to have monopolized the online search market in a separate case. Not a big move, all things considered, given the gyrations we've been seeing for some of the big tech names, but a reason to potentially sell out of the stock. We did see Trade Desk, which trades under the ticker TTD, pop like 8%. Now it's up closer to 1%. So investors trying to kind of read through the ramifications of this decision. Again, partially losing, not a complete loss for the company, but certainly an area that I think people are keeping an eye on, especially with some of the antitrust regulation and uncertainty, a lot of pushback from broader regulators and kind of big tech falling in their crosshairs.
Yeah, we were just talking to Gene Munster from Loop Ventures. I think Gene is one of the best tech analysts on the street. And he says this ruling per se is not that big of a deal. The bigger issue for Gene's perspective, and his fund sold their shares, is just kind of AI and what that means as a competitive threat to traditional search, and to what extent does Google have to adjust there. So Bailey Lipschultz, thanks so much for joining us in that Stocks Report. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for the 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. Well, the stock story of the day to the downside is United Healthcare. This stock is down 22%. That's the most in 25 years after they cut their forecast. And, it's their first earnings miss in over a decade. So really shocking the investors in that stock as well as the insurance space overall. So let's get some clear analysis on this. Glenn Losef joins us, Bloomberg Intelligence Senior Equity Analyst covering these insurance companies. Glenn, talk to us about United Healthcare. What happened today?
Yes, hi. So United reported its 1Q results, which were largely expected to be in line by the consensus, including us. And the company basically cut guidance by 12%, I believe. Initial guidance was also sort of seemed conservative relative to their long-term target. And now the new updated adjusted guidance is showing a decline of about 5% year over year. The main reason for it is the company highlighted that Medicare members are seeking twice as much care as they did the same period last year, which obviously drives costs and so on and so forth.
Yeah, they said, at least John Tozzi of Bloomberg News, his reporting says that the company said it was blindsided by rising medical costs. Is that surprising that a medical insurer would be blindsided by these costs? Isn't this the business that they're in?
Well, it's not surprising. It happens from time to time, but the impact based on the guidance cut is more than anyone could have expected, including them. Insurers usually look at the trends of previous years to sort of forecast what the medical costs would be in the upcoming year. And obviously, if it happens that all of a sudden, I need more care this year versus last year, people getting older, maybe some people deferred it, maybe some people changed plans, medical costs, care demand goes up, and with that, costs go up and impacting health insurers like United. So it's surprising, but it happens maybe not to the degree that we're seeing this time around.
What drives rising medical costs for somebody like United? I mean, they're the 800-pound gorilla in this whole industry. What's happening?
Well, it's pretty easy. More people are seeking more care. That's what's driving the cost. People getting sicker, with age, or people deferring care from last year to this year, for example, that increases costs. On the sort of the other side of the care demand, more people are getting prescription drugs, for example. More people are interested in preventive care versus reactive care, sort of, just going more often for checkups, stuff like that drives the costs. But it is surprising that sort of this significant jump relative to expectations.
Where does United Health go from here? I mean, just on a stock level, falling in its biggest drop since 1999. Does that move look overdone to you?
No, we're not supposed to sort of comment on price targets, as you well know, but basically the stock is down about 22% as of right now. If we take a look at the guidance cut, which was $3.50 from the previous guidance, and apply sort of historical multiple over the last 5 years, the downside should be about, maybe 60% of what it is right now, about $80 or so. So based on that, it's probably an overreaction just because things like this don't usually happen to someone like United, as you mentioned, the 800-pound gorilla in the space, and probably the most knowledgeable people in the business. But it is what it is, and market sort of puts its own view on where the stock should trade.
I'm looking at the ANR function for United Healthcare. 27 buy ratings on the street, 1 hold rating, 1 sell. No ratings changes today, given this move in the stock. Great job, guys. Glenn Losef, Senior Equity Analyst for Bloomberg Intelligence, joining us here. Let's switch back to the markets broadly defined here. We got, again, red and green on the screen here. The S&P up 20 points, the Dow off 400, and the NASDAQ pretty much unchanged. Check in with Vince Signorello, Bloomberg macro strategist. Hey, Vince, what are you hearing in the markets? What's kind of the the driver of market sentiment today? Is it still just trying to get a handle on where the president wants to go with his tariff policy?
Yeah, it is. It's a couple of things. We saw a little bit of interesting data come out this morning, and it's usually something we don't pay a great deal of attention to, which is the Philadelphia Fed business outlook. And one of the things that really stood out was the new orders number, that you'd expect there would be a continuation of a build in orders as we head into what would be the end of the 90-day pause for the tariffs. And instead, we saw a pretty significant drop. In fact, we haven't seen a drop like this since basically 2020, the pandemic, or 2009, and two periods in U.S. economic history you really don't want to associate with. So that really shook the markets a little bit, and thinking that have we hit a saturation point with business and consumers where they've already kind of pre-purchased, if you will, the items that they want to in terms of front-running tariffs. And if that's the case, it really doesn't bode well for second quarter growth. The other, as you mentioned, exactly is the tariff situation. We've got two approaches from two different economies, if you will. President Xi is on the road. He's glad-handing associates trying to sew up economic tariff deals in Asia and also in Europe, whereas Trump is kind of sitting back in the White House and saying, come to me and we'll talk about tariffs, almost as the traders say, kiss the ring, if you will. Two completely different approaches, and you wonder how that's going to play out in the long run. You would think that President Xi's approach is going to come out more the winner in this, being more likely to sew up deals as he's going around wanting to seemingly make a bigger effort, if you will. But that still remains to be seen and how that plays out. But definitely the big thing, I think, is what's really starting to weigh on traders' sentiment is, have we bought all of the things or most of the things that we want in the first quarter and front-run economic growth for the second quarter and perhaps beyond that? And is that going to weigh into a difficulty for the Fed to deal with in terms of growth and inflation?
How are you looking at the Treasury market right now? We have yields a little bit higher on the longer end of the curve, pretty flat on the shorter end. What do you make of these moves as of late?
It kind of makes sense if you think about it. We're seeing some steepening in the curves in the 530s. We hit earlier session highs. Actually, we're kind of there now at 87 basis points. It speaks of basically where traders, I think, see the story going. They see the Fed standing pat. And so near-term rates really don't have anything to drive them, if you will. But they're also hearing what they heard from Powell yesterday about potentially inflation for longer, even stickier and maybe even higher. And so that puts a little bit of pressure on the back end. And I think it makes sense to see steepeners getting involved. And it suggests as we go forward, that's going to be the conundrum for the Fed. If we see slower growth, that what Powell said yesterday, he saw a difficulty with the dual mandate. That's kind of a little scary when you take it into like its real context, right? You're seeing potentially the Fed saying possibly the job market's going to slow, possibly the economy is going to slow, and possibly inflation is going to remain stickier for longer, which basically means the Fed can't do anything. They can't cut to stimulate growth because then they might fuel inflation. So puts them in a box.
What'd you make, you got 30 seconds, Vince, what'd you make of President Trump's commentary about Fed Chairman Powell and his time in office?
You know, he's angry with him for sure. He compared it this morning to the ECB cutting and how come Powell's not cutting. They're behind the curve, et cetera, et cetera. But apparently what I'm hearing from the White House sources is that Bessent is in his ear and basically saying, fire him and you'll create extraordinary turmoil in financial markets. So while he's mad at him, he's going to be stuck with him, I think, for a while because he doesn't want to shake up Wall Street and what would inevitably happen if Powell were fired tomorrow. The markets would fall apart, at least in the near term.
All right, Vince, thanks so much for joining us. Vince Signorella, he's Bloomberg macro strategist for Bloomberg News, joining us via Zoom. Nobody does the Zoom thing better than Vince Signorella, that's for sure. Looking at the markets, kind of red and green on the screen here. The S&P is now up about 18 points. That's 0.3%. The Dow off 470 points. Again, a large part of that is from United Healthcare. That stock is off 22%, and that is a big component of the Dow Jones Industrials average. The NASDAQ is off 13 points. That's just about 1/10 of 1%. So kind of red and green here as we get ready for a 3-day weekend for the equity markets and the bond market as well. 10-year Treasury up a couple of basis points, 4.3%. Alex Steele, I'm not sure where she is, but I'm going to give her a quote on oil, WTI crude oil, up about $1.50 today, just above $64 an ounce. And Bitcoin, the Tom Keene quote, it's up 0.3%, 84,500 for Bitcoin. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:22 on Wall Street. I'm Amy Morris. Stocks edged higher on this holiday-shortened trading week. We do check markets for you all day long at Bloomberg. Well, now they're going lower again. The S&P 500 is still 0.3% higher, but NASDAQ now 0.1% higher, or rather lower. And the Dow also flip-flopping a bit. It is now 1% lower. The 10-year Treasury yield at 4.3%, the 2-year yield at 3.77%. And a reminder that the bond markets are closing at 2 o'clock this afternoon, Wall Street time. United Health Group cut its annual forecast and reported its first earnings miss in more than a decade, causing shares across the insurance industry to tumble. The company was blindsided by rising medical costs, especially in its Medicare Advantage health plans and Optum Health care delivery business. They were affected by Medicare payment changes. Shares of United Health Group now 22% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return you now to Bloomberg Intelligence with Paul Sweeney and Emily Graffeo.
All right, Amy Morris, thank you so much. We appreciate that. Emily Graffeo sitting in for Alex Steele. Alex will be back Monday. She better be. That's all I'm saying. And we're here in our Bloomberg Interactive Broker Studio. We're streaming live on that YouTube thing. So head over to youtube.com, search Bloomberg Podcast Live. That's where you'll find us. We need some perspective, folks. When you see markets kind of ripping around as they have over the last several weeks, you need to talk to somebody who's seen some cycles before, who's managed through these markets. And our next guest is certainly one of those folks. David Kudla, he's a founder, chief executive officer, and chief investment strategist. As I like to say, he's the boss at Mainstay Capital Management from lovely Troy, Michigan. Hey, David, what's the conversation you're having with your teams? I bet you there's some folks in Mainstay Capital that haven't seen some of this volatility before. What do you say to your teams? What do you say to your clients these days?
Well, you know, when we look at the markets that we've been in this year, and it's reminiscent, starting to become even more reminiscent of 2022 in terms of certainly what's happening with stocks and just the volatility in bonds. They're faring a little better, but the volatility in bonds. And so, you know, when we talk to clients and we talk among the team, we talk about these different levels of investments or different levels of investing. We call level one is indexing, just S&P 500 index fund. That's worked very well over the past couple of years. It's worked well over very many years because you own large cap stocks that have done well. From there, you go to maybe a buy and hold approach of a more diversified portfolio than the S&P 500, level two. Level three, maybe add periodic rebalancing to that. Those all work fine in a bull market. In a year like this year, 2022, other years, we have what we call level four investing, and that's tactical asset allocation. That's where investors need to be right now. They need to be investing at level four. And that's important because with the volatility in stocks and the downside volatility we've had, the volatility in bonds, we can look to other areas like liquid alternative investments, gold, market neutral funds, long short strategies, hedging strategies, significantly overweighting Europe. Those things that are far beyond just a domestic S&P 500 indexing or a domestic stocks and bonds.
Right. So when you have a client say the S&P 500 is falling, shouldn't I buy the dip? Isn't that, the Warren Buffett advice is to continue to keep buying even throughout downturns. What do you say to those clients when you want them to maybe be a little bit more tactical?
Yeah, so, dollar cost averaging always works well over time. And for those participating in retirement savings plans at their workplace, a 401k plan, they're getting that automatically through payroll contributions. But in terms of the rest of your portfolio, that tactical part, it's more of not as much market timing as maybe sector rotation or asset class rotation. But the key is we need to move beyond, and this is what we advise our clients. We need to move beyond in a year like this, or in 2022, another good example, those traditional asset classes of stocks, bonds, and cash, and look abroad, which we haven't done in years to a significant degree. We have portfolios this year that have 3 times as much international exposure that they would have had this time last year. And so a portfolio starts to look very, very different in a year like this. I don't want to say a hedge fund strategy but certainly looking beyond traditional asset classes. It's key in a year like this because there's areas that are delivering positive returns, with a bond market that's about flat with a lot of volatility and a stock market that's down 10% this year.
Hey, David, does level 4 investing, the tactical investing, does that mean
kind of asset allocation changes for you?
Yes, that's exactly what it means. So tactical asset allocation, there was a study done a long time ago in 1986 where they determined that about 93% of your performance comes from asset allocation and 7% from stock picking. Some may argue with that, but that study has been done a couple of times. And essentially, what we're doing is we're looking for areas of opportunity for growth and areas to protect ourselves in downside risk. And that could be among asset classes, and that can be within sectors. But sometimes it's moving to commodities or liquid alternative strategies. Gold, for instance. We have an allocation to gold in our portfolios this year for obvious reasons, and we can talk about the thesis for gold, why it's done so well, and why we think it has a long runway ahead with the markets reaching peak uncertainty and ultimate fear trade. But yes, that's exactly it, Paul. It's about getting to rotating to those areas that will do well in this environment and avoiding the pitfalls.
Yeah, let's talk a little bit more about gold. Is that the hedge of choice? Because I know you mentioned liquid alts, but is gold the hedge of choice right now?
It really is. Commodities more broadly have done okay, but not as well as, say, in a year like 2022. And quite frankly, we're looking for the economy slowing this year. And if we have a slowing economy, we use less commodities. Gold it stands out there by itself, even among the other metals and even precious metals. There's considerable central bank buying. There's considerable buying among private investors, even institutions. Because of that, there are a lot of reasons people have believed gold works over time, whether it's inflation, whether it's uncertainty, whether it's fear of what's happening in the stock market, whether it's a falling dollar. Guess what? We have all that right now. So the thesis for gold is very strong and will continue to be. So yes, it has become, certainly with the massive positive returns it's had over the last several months and really over the last more than a year, we've had just a considerable run and a great hedge in an otherwise troubled market for stocks and even bonds.
David, thanks as always. We always appreciate getting your perspective. You've got a lot of experience in these markets, some excellent wisdom. We appreciate it. David Kudley is a founder. He's the Chief Executive Officer and the Chief Investment Strategist at Mainstay Capital Management. They are located in Troy, Michigan, a suburb of Detroit. I spent some time there back in the day. Good stuff. All right, let's talk a little economics. We had some economic data here today. I don't know, initial jobless claims came in 215,000. That's the number we've seen forever. The consensus was 225,000. So let's bring in Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, we're not seeing the angst we're all feeling in the marketplace, and we're seeing in the financial markets. We're not quite yet seeing it in the data, are we?
As they say, we're not seeing it in the hard data.
Okay.
We are seeing it in the soft data. Jay Powell saying yesterday the labor market remains in good shape, and that does appear to be what we've got going with jobless claims, only 215,000. That's a drop of 9,000 from the prior week. Not what you would expect with all the announcements going on about federal workers being fired. But then we did have the Philadelphia Fed Business Index come out, and a complete collapse in confidence
you have
there.
that. That's a good one.
Minus 26.4 from a positive 12.5. And not only that, but their inflation expectations number went up. So it's still the same thing that we're
What does the Philly
seeing.
Fed look at? What did they do? Did they go out to their businesses in the Philadelphia Fed region?
Yeah, I think
say,
it's something like 400.
Wow.
They're not all manufacturers, but they're largely manufacturers. They have a separate services survey. And it's been around for a long time, so it does get some weight. But it does suggest that, like we've seen with consumers and other business surveys, people are really nervous about what's going to happen. The question is, do they translate that into action?
So the Philadelphia Fed Business Outlook, that's what you would call soft data. Can you just remind us what's the difference, soft versus hard data?
Soft data is survey data. It's based on people's feelings as opposed to actual numbers that you can count. The Philadelphia Fed, like the ISM numbers, asks people, was business better this month than last month? and those they then do a diffusion index on the results. And obviously there was a lot of people who said no this past month. And their new orders index also collapsed, which is maybe a front-running indicator that we will see problems in business spending coming up.
Boy, I just, this isn't your remit, but I just don't see the political angle to any of this, boy. I mean, if we think it's the economy, stupid, that really drives politics, this can't be good, but we'll see. Maybe it's that whole short-term pain for long-term gain kind of thing. We'll see. President Trump, social media regarding Fed Chairman Jay Powell. What do you and the folks you talk to think about that? I mean, does Fed Chairman Powell have anything to worry about here?
I don't think so, other than it's a pain in the butt for him.
Yep.
It's a very complicated legal situation, but scholars basically agree that probably the president cannot fire him. The law says he can only be fired for cause.
Yep.
So the follow-on from that is if you tried to do that and you had to then go through court fights again, as Powell has suggested the Fed would do, then you run up against the fact that his term ends in May of next year, as his term as chair ends in May of next year. So do you really gain anything if you can't get him out until March of next year or something like that, if the president were to win?
It seems like, I think this is what Ira Jersey said, Trump is looking for a scapegoat. If the economy doesn't do well, we'll just blame it on Powell?
The Fed, CNBC reporting a little while ago, which has kind of turned the markets around for a bit, that a senior official had told them the president wasn't threatening to fire Powell. He was just venting. And that's something we have seen quite a lot from this president about the Fed, and likely to continue to see, since Powell suggested yesterday they're not in any hurry to cut rates.
Right, and then you see the ECB cut rates this morning, and if you're president, well, where's my central bank? Exactly. I've got a central bank. Why aren't they cutting? All right, Michael McKee, thank you so much. As always, appreciate getting your perspective there. Michael McKee, International Economics and Policy Correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive broker studio. Just looking at the bond market here today, the 10-year Treasury, the yields are up about, call it 4 basis points, 4.31%. Kind of in that lower trading range, I would say, that we've kind of been in the last several months, although we've had to move higher in rates. We're now back down to around 4.3% on your 10-year Treasury. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Commonwealth. Join over 2,000 independent financial advisors taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. This morning, President Trump posted on Truth Social that Powell's termination cannot come quickly enough, referring to Fed Chair Jay Powell after his address at the Economic Club of Chicago yesterday, where he stressed the importance of the Fed's independence. Mohammed El-Arian, Queens College Cambridge president and Bloomberg opinion columnist, examines how continuous conflict between the president and the Fed can be an issue.
There's a real question for Chair Powell. Should he step down to preserve the independence of the Fed? Because otherwise, the Fed will be the subject of a lot of attacks going forward.
Bloomberg opinion columnist Mohammed El-Arian on Bloomberg Surveillance. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.4%. NASDAQ little changed on the downside. The Dow now down 1%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.78%. And a reminder for you that the bond markets will be closing at 2 o'clock this afternoon, Wall Street time. Anna Paulson will be the next president of the Federal Reserve Bank of Philadelphia, replacing Patrick Harker, who will be stepping down June 30th. Paulson, currently head of the research at the Chicago Fed, will take office on July 1st and be the first woman to lead the Philadelphia Fed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Paul Sweeney and Emily Grafeo.
All right, Amy Morris, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan, and we're streaming live on YouTube as well. Big news in the world of kind of digital advertising. Google partially loses U.S. advertising tech antitrust case. So a federal judge found Google guilty of illegally monopolizing online advertising technology markets for advertising exchanges and tools used by websites to sell ad space. To figure out what all that means, we've got some smart people who do this. We have people at Bloomberg Intelligence that just look at litigation and what it means for certain companies, because that can move stocks in a big, big way. We've got a couple of voices here. The one you know, Jennifer Rhee, a Bloomberg Intelligence senior litigation analyst. We've talked to her for a long time. She helps us out on a lot of these big cases. Now we've got another voice as well on Bloomberg Intelligence, Justin Teresi, Bloomberg Intelligence antitrust litigation and policy analyst. He's down there in D.C. right now. Jen, talk to us about Google here. What did the court find here?
Yeah, this is a really complicated case, honestly, Paul. Google has these products, which you refer to. It's called the ad tech stack, and it's not something, normal consumers know about, but it's a series of software from start to finish whereby publishers and advertisers can come together to sell and buy space on the internet, right? And it's important because it's moving very quickly and lining up the ads properly, with the consumers that should see those ads. Google actually has, through a series of acquisitions and some of its own products, control over that entire stack. It has competitors for certain pieces, but it's one of the only ones that has all the pieces. And so the allegation here was that Google was manipulating its control over some very desirable pieces of the stack to force publishers and advertisers to use all of its products, taking fees all along the way and basically naming its price because it had these must-have products. So what this judge found was that for some of those products, one on the publisher side, the publisher ad server, and then the ad exchange that sits right in the middle and does the auction between the advertiser and the publisher, that Google was monopolizing both of those products and also illegally tying them together, meaning, hey, publishers and advertisers, if you want to use our ad exchange where we have these really desirable advertisers, you have to use our publisher ad server, and therefore we keep our 90% or so market share.
All right, Justin, let's bring you in here to just get your take on the context of Google, because this isn't the first time that there's been an antitrust case against Google. What did you make of this decision?
Yeah, absolutely. And I think Jen really hit the nail on the head here. This is obviously compounding the search ruling that came out last year. And we're heading to a remedies phase on that case this coming Monday. But to Jen's point, really, this aspect of the ruling, focusing on the publisher ad server and that exchange that Jen said sits in the middle, that is the crux of the case here. The government's going to likely ask now for divestitures of that publisher ad server and the ad exchange in the middle. But I really do question whether or not the court is in a position to order that. I think a lot of testimony at the trial, which I attended, really pointed to the fact that publishers feel reliant on the ad server because the ad exchange in the middle then gives them the real-time advertising they want from Google Ads. So if you skip that cord in the middle, perhaps you get a remedy that's desirable without actually forcing a divestiture out of either of those properties.
Justin, I wonder, like, at the trial, who do they get to get up on the stand and say, I don't like Google? Doesn't everybody is anybody really complaining about Google and its advertising service?
Yeah, Paul, I think really who's complaining is the publishers who are selling that space on their websites through the publisher ad server, right? I think their complaint is largely that they don't really have a lot of control over the kind of ads that end up on their website. They don't have control over the pricing involved with all of that. They don't really like the fees that are involved. And if they want to use a different ad exchange in the middle, perhaps, and find a lower rate, that they're paying to get those ads furnished to their website or want to collect a higher fee, they're not able to do that if they're really relying upon the prices and the policies that Google is using to display those ads on their properties.
What did Google say in response?
Well, Google would say, look, we have loads of competitors for these products. They sort of pick apart the policies that the Department of Justice pointed to, saying that you're forcing these companies to use your products, saying, no, based on these policies, they're not forced. They have options. They can go to our competitors. And by the way, there's this doctrine in antitrust, and it's called a refusal to deal. And essentially, it's a big defense that's used by a lot of these companies. Essentially, what the refusal to deal doctrine says is that any company has the right to deal with who they want to, and they don't necessarily have to do business with their competitors. So in other words, a competitor ad exchange working with Google's publisher ad server. And that can often work, but in certain cases, the conduct of the company goes beyond just sort of what's covered by a refusal to deal, and it becomes an unreasonable restraint of trade. And that's where you sort of get past that. So what Google tried to say is, well, this isn't unlawful under the antitrust laws because we don't have to do business with our competitors.
Folks, here at Bloomberg, we have complete transparency amongst all employees. We know where everybody is all the time. It's called the out function. It's the calendar. I look for Justin. I'm like, where is this guy? And he's based in New York, but he's down in D.C., and I go look at his calendar, which is the out function, and it's something called the FIC versus Meta trial, another technology company. Why are you down in D.C. for this trial? What is this trial?
This is the topic of the week, I feel like, Paul, right? So the FTC is suing Meta right now, seeking a divestiture of Instagram and WhatsApp for the actual acquisitions of those companies they're arguing was anti-competitive. But as we all know, they've owned these properties now for well over a decade. And I have to say, seeing Zuckerberg on the stand the last few days, the testimony has been really, really strong. He did a great job fending off a lot of the criticisms coming from the FTC, whose case I think we both thought, Jen and I, was already not necessarily the strongest. There's a lot of holes there. I don't think they really defined the marketplace the right way in terms of positioning Meta as a monopolist. So there's a lot going on. It's big tech on trial, I think, everywhere you look these days.
That's right, and now it's not just Jen. We've got a bigger team of litigation analysts. Jen, as you sit back here, in your experience, are these tech companies at risk, do you think, from the courts?
Absolutely. Look, you're at risk. There are liability decisions now, 2 of them against Google, right? And in both cases, the Department of Justice is going to ask a judge to force it to sell assets. And as long as that's out there, those companies are at risk. Now, would I bet that that's what's going to happen? No. I don't think that in the search case, which has a remedy hearing starting Monday, Google will be forced to sell Chrome, and I don't actually believe in this ad tech case that they'll be forced to sell off the publisher ad server or the ad exchange. But they're at risk, of course, because you have no idea what a judge is going to do. I should say that the remedy hearings will take place, decision will be made, and at that point, Google will appeal.
All right, Jen, fantastic. I tell you, folks, Bloomberg Intelligence, it's not just stocks, bonds. We've got litigation antitrust research at BIGO. This stuff moves stocks. If you're a technology investor, you have to have an opinion on what the antitrust risk is for some of these big tech names, whether it's Amazon, Meta, Google, and we've got experienced antitrust attorneys writing this research for our Bloomberg customers on BIGO. It is awesome stuff. Justin Teresi, Jennifer Reed, they are Bloomberg antitrust analysts for Bloomberg Intelligence. We got them, and we had them in studio today giving us some opinions on Google and Meta. You can't get it anywhere else. We'll have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Coming up, after the close today, Emily, Netflix is reporting earnings.
This is so strange.
That's weird. It's almost like a Friday.
Yeah. What are they hiding?
I don't know. I mean, the stock has been great. I mean, it's up 10% this year when pretty much everything else is down. So, but they're going to be reporting earnings after the close, and I tell you, it's been such a great stock. But let's see what they're going to do on the earnings front here. Geetha Ranganathan joins us, Bloomberg Intelligence analyst. She covers all the media companies, including this Netflix thing here. Geetha, what do you expect to hear from Netflix after the close today?
Okay, so thanks, Paul, for having me. So for the very first time, Paul and Emily, Netflix will not disclose anything about their subscriber numbers.
So what are you guys going to do then?
Yeah, I know. So this is why this really feels strange. I mean, it's not only is it right before the holiday, but there's no subscriber related disclosures. So what they're really trying to do is, kind of shift the narrative away from subscriptions or just subscriptions to now more financial metrics. So they're asking the street really to focus on top line growth. And the number that we are looking for this quarter, for the first quarter, is going to be 11% revenue growth, 28% operating margin. So that's really become the focus now. The fact that they can grow their revenue double digits, nice and steady, out for the next few years, as well as keep expanding their margins. And they did that last year by expanding it almost 600 basis points. We'll continue to do it through this year as well.
Why did they take away their subscriber numbers? Why are they no longer reporting those?
Yeah, so they feel like the business now is kind of in the second phase or second innings, if you will. I mean, the first phase was really all about, gathering all those subscribers from all across the world. And they did that. They did a really successful, really good job of it with 300 million global subscribers, the #1 streaming service in the world. But what has happened is it's becoming more and more difficult to get that subscriber growth, right? So 2 years ago, they kind of hit this wall when they actually started losing subscribers. And at that point, they introduced these new initiatives. So there was, a password sharing crackdown. There was this new advertising-based tier, and that actually helped them kind of really reinvigorate subscriber growth in a big way. But the reality of the story is that this is becoming a mature business, and so it's got to be kind of treated like one. And so they're moving now more to the financial portion of the business and really focusing more on growing revenue and growing profits. And so that's why we're kind of seeing this shift.
Is the Netflix model kind of recession-proof? Do I want to own Netflix, Geetha, if we think this economy is going to slow down and maybe even go into a recession? I'm sure you've been asked to kind of flex some of your models for some of your companies. How does Netflix fare?
Fares very well. I think it is one of the best positioned names in media and internet today. And that's just because of the model itself, Paul. So, it's a subscription heavy model. There is very limited. Yes, they did introduce an ad tier, but so far that is a very, very nascent business. So if you just looked at 2024, they haven't actually disclosed advertising revenue, but we estimate it was about 3% of revenue. So literally no exposure to advertising, which typically tends to be the first industry that is affected in a downturn. So they're a subscription heavy business. And again, if you ask about whether people would cancel their subscriptions at some point, we don't really think so, because one thing that Netflix has established itself is, it has become kind of like the dominant streaming service. It's a must-have service. And again, yes, some people may say, okay, $25 or $18 a month for a standard plan or $25 for a premium plan is pricey. But if you look at the depth and the breadth of content, I mean, this is a compelling value proposition. And hey, if $25 is too much for you to pay, you do have a plan, which is, of course, the ad-based plan at $8 a month. So I think that's a steal. That's a no-brainer. And, a lot of people probably, if things get a little bit tight, in terms of spending and budgets, they can always opt for that $8 plan. So I think whichever way you look at it, Netflix is in a win-win position here.
Geetha, you're a trained media analyst, but let's be honest, that basically means you're a theme park analyst these days. Talk to us about Warner Brothers. That's going to be a new theme park down in Orlando. That's going to be big, isn't it?
Yeah, so actually that's epic, and that's going to come from Comcast. It is going to be a huge park, Paul. It's going to open sometime in May. And really what we are, and I think what the whole street is wondering about is what this does to Disney. There's already been some fears about a general slowdown across the parks business and definitely for Disney as well, because prices have gone up so much over the past few years. But this really definitely adds a whole new layer of competition. And we think, on the whole, the way that Disney's kind of been positioning it is that in general, this is good for all of Orlando. I mean, the Orlando parks for Disney get almost 50 million visitors per year. And so they should bring in more visitors. But we think that, at least in the short term, it will have a little bit of a negative impact. But all good for Universal and the new Epic Universe park coming
Is
out
Warner
there.
Brothers Discovery, just asking for a friend, are they going to have an analyst meeting to celebrate down in Orlando this opening? Or Comcast, Comcast.
Yeah, so they already actually had one for the journalists, but I haven't heard one that, for analysts.
They're going to miss it. I mean, this is what Disney does great when they open a new theme park. Like I went over to Shanghai, years ago when they opened Shanghai, and just get the analysts on the board, if nothing else. It's a good strategy, and Comcast is going to blow it, maybe. All right, Geetha, call up Brian Roberts, make that happen. Geetha Raghunathan, she is the U.S. media analyst for Bloomberg Intelligence. She's based down there in Princeton. Again, Netflix reporting earnings after the close. The stock's up 10% year to date, bucking the trend here for a lot of the market here. So we'll keep an eye on that. So thanks for stepping in today.
Yeah.
Appreciate it.
Absolutely.
I think Alex is going to be back Monday. That's kind of the plan here. So hopefully she can right the ship here and give us what's going on out there. Coming up, Balance of Power, I believe. Joe Matthew, maybe Kaylee Lyons. I'm not sure. That's coming up in just a moment after we have our news report. This is Bloomberg.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. A federal judge says Google illegally dominated markets for online advertising technology, ruling in an antitrust case brought by the government. CBS News tech contributor Ian Scherr.
This case revolves around advertising technology and effectively saying that Google used its power as one of the largest websites in the world to drive up prices for advertising.
President Trump posted on social media that Federal Reserve Chairman Jerome Powell's termination cannot come fast enough. That swipe comes after Powell warned the Trump tariffs will likely mean higher inflation and slower economic growth. Hofstra University constitutional law expert James Sample.
The mere threat of terminating Chairman Powell is uncharted territory. The idea of following through on it raises a host of, at this point, unsettled legal questions.
In the battle over a man mistakenly deported to El Salvador, the Trump administration released court documents from a 2021 domestic violence case that named Kilmar Abrego Garcia. CBS's Camilo Montoya Galvez spoke to his wife.
She did file a protective order against him in 2021, but she told us in a statement that they were able to resolve that issue as a family and that he's still a loving father and husband.
Abrego Garcia has not been charged with or convicted of any crime. Trump administration's escalated its ongoing battle with Harvard, now threatening to revoke the university's ability to host international students. It seems federal money for some farms has been held up and may have dried up.
With spring planting season here, many farmers in Ohio are in a bad way after the Trump administration froze $1 million for a federal program that allows growers to hire migrant farm workers.
It's a legal way for people to be here. It's a way that it protects both the farmer and the farm worker.
Brenda Bird is president of the Ohio Farmers Union.
Yes, the lack of labor will surely hit all of us in our pocketbooks.
Up to 75% of farm laborers in Ohio are Hispanic. Jim Crisula, CBS News.
Well, CBS's Michael Wallace tells us the rapper Drake has expanded a defamation lawsuit he brought against his label, Universal Music.
Drake says more people now believe he's a pedophile after Kendrick Lamar performed his song Not Like Us during the Super Bowl halftime show and the Grammys.
Say, Drake, I hear you like I'm young.
Drake claims those performances have led to more threats against him and his family. Universal calls Drake's accusations baseless and an affront to creative expression.
And checking Wall Street, right now the Dow is down 486 points. The S&P is 12 points higher. This is CBS News. A planned redemption sequel to a botched music festival has hit a snag.
The first party was such a disaster, it became the subject of a Netflix documentary.
Desperate people do desperate things.
Now the fate of Fire Festival 2 is up in the air. The official website has posted a notice. The event scheduled to begin May 30th in Playa del Carmen, Mexico, is postponed. No comment from the organizer, Billy McFarland, who served almost 4 years in prison for wire fraud in connection with the 2017 event in the Bahamas. It promised big-name bands that never showed and luxurious accommodations that turned out to be makeshift tents and folding chairs. Deborah Rodriguez, CBS News.
New York City's medical examiner says Michelle Trachtenberg died of complications from diabetes. The 39-year-old actor, known for Gossip Girl and Buffy the Vampire Slayer, was found dead in her home a couple of months ago. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Thursday edition with another world leader in town, the Italian Prime Minister, bringing the issue of tariffs back to the Oval. Same day, President Trump calls for the termination of the Fed chair. We've got a lot to cover, and we will do so in a moment with the help of our White House editor, Jordan Fabian, with us here in Washington. Researchers say they found the strongest evidence yet of extraterrestrial life. It's quite a headline today, but the program that made the discovery is facing significant cuts from the DOGE. And we're going to talk about what that means for the program with Keith Cowing at NASA Watch. Analysis today from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is with us alongside Democratic strategist Caitlin Legacki. So let's get started with much to discuss on Wall Street. The markets now, and Amy Morris with her update. Amy, how's it look?
Hi, thank you, Joe. The stocks are kind of bouncing around on this last day of a holiday-shortened trading week. Traders have been analyzing earnings reports and President Trump's tariff offensive. We do bring you the markets all day long here at Bloomberg. The S&P 500 is up 0.4%. NASDAQ is little changed on the downside. The Dow is down 1.1%. The 10-year Treasury yield at 4.3% and the 2-year yield at 3.77%. And just a reminder, the bond markets will be closing at 2 o'clock this afternoon, Wall Street time. United Health Group cut its annual forecast, reporting its first earnings miss in more than a decade, causing shares of major health insurers to plummet. The company attributed that miss to rising medical costs, particularly in Medicare Advantage health plans and its Optum healthcare delivery business, affected by Medicare payment changes. Shares of United Health Group are now 23% lower. Studies show Eli Lilly's experimental weight loss pill worked just as well as the Ozempic shot in a trial, bringing it closer to developing a needle-free alternative. Shares of Eli Lilly soared on that news. Bloomberg's Damian Garda.
Which is kind of the holy grail product in this market. These results don't guarantee that Lilly's going to run away with blockbuster success, but this is what investors were looking for from this readout.
Eli Lilly shares now 14% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you so much with us on the fastest show in politics, and so are you. Thanks for joining on Bloomberg Radio, on Satellite Radio, Channel 121, and on YouTube, where you can find us now. Search Bloomberg Business News Live. The stream is up and running all day. You can even back it up and kind of pause things if you need to. It's one of the coolest things that we have going, and you'll make some friends there while you're at it. I'm Joe Matthew in Washington. I missed you yesterday. We've got a lot happening today. Much of it at the White House. The Italian Prime Minister just arrived, as a matter of fact, here as we continue our way through this Thursday in Washington. Tomorrow's a holiday, so people are feeling like a Friday. It's kind of nice outside, and I won't even say it out loud that things actually started on time today at the White House. Sorry, James, I didn't mean to blow that. Here's how the timeline is going to work. Okay, as I mentioned, the Prime Minister has arrived. Maloney in the Oval. They're going to have some time to talk and catch up. We're said that they're friends, right? He's called her a very wonderful woman. I believe a live wire. And then around 1 o'clock, it's 1:05 p.m. Eastern time, we'll call it an hour from now, there will be a bilateral meeting in the Oval Office in which the White House press pool, that's a whole story on its own, will be brought in, and you'll hear the conversation. And we're going to, of course, bring that to you live here with tariffs, of course, the issue on the table. And we're spinning a couple of plates as always here. Imagine the life of Jordan Fabian being the White House editor with this visit happening only hours after Donald Trump called for the firing of the Federal Reserve Chair. Jordan Fabian, our Bloomberg White House editor, it's just a day that ends in Y at the White House, right?
Indeed, a lot going on.
Speak first, before we get to Powell, about the significance of this meeting. Donald Trump is not engaging with the EU today. He's engaging with a single country. Of course, that is Italy. Is my Brunello di Montalcino going to go up 200% after these two sit down today?
A lot of people are worried about that, Joe.
They are.
And this is a good test case today of whether any progress can be made. There were some talks earlier this week, but at a lower level between EU officials and U.S. officials that didn't go so well. So I think people are looking to this meeting because President Donald Trump and Giorgia Meloni, the Prime Minister of Italy, are a little more ideologically aligned than some other European leaders. Right. So some on the European side are hopeful that this could be the doorway in, perhaps, to a more successful and fruitful trade negotiation between the U.S. and that bloc.
We're being told that we've got a feed from the White House here. He's taking questions from reporters. They're in the luncheon. They've brought the press pool into the luncheon. Let's go live right now to the White House and put an ear on this.
Simply we have to talk
and find ourselves. She believes in the president.
Also, and find ourselves in the best middle way to grow together. That's why I'm here. So, if I wouldn't think it's a reliable partner, I wouldn't be here.
We have a very good relationship together, and as countries, we have a very good relationship.
To follow up, Mr. President, what if there is not a trade deal with the EU by the time of the end of your 90-day pause on reciprocal?
Oh, there'll be a trade deal, 100%. Oh, well, you think there won't be? Of course, there'll be a trade deal. Very much. They want to make one very, very much, and we're going to make a trade deal. I fully expect it, but it'll be a fair deal.
Are they on your priority list?
Everybody's on my priority list.
Mr. President, do you plan to meet with the President?
Say it.
Do you plan to meet with
Wait, one at a time, please. No. First, no. You, and then we'll go.
Do you plan to meet with the President of the EU, Ursula von der Leyen? Do you plan to have other meetings with EU leaders as well?
Many. We had a meeting yesterday with Japan. As you know, we've had numerous talks, very, very at the highest level, frankly, with other countries. Yeah, we're doing very well, and we're moving along on trade very well. The United States was ripped off and taken advantage of by every country in the world, practically. I mean, I have to say practically, but just about everyone. That's not going to happen anymore, but we're going to make fair deals.
Mr. President, given talks with Japan and Italy this week, do you expect to announce an initial trade deal with any of these countries by
At a certain point, yeah. We're in no rush. We're in no rush. You have to understand we're getting right now 25% on cars, 25% on steel, 25% on aluminum. We're getting a 10% baseline. We took that down just because it was, the appropriate thing to do until we decide what the number will be. And we're, taking in a lot of money, which we've never done before, frankly. With Biden, we were losing a fortune on trade. But we're moving along very nicely, and we're going to end up with a baseline of a substantial number, which we never got anything. The United States never got anything until I came along, and then I put very substantial tariffs on China, if you remember. And we took in hundreds of billions of dollars. But then we had a rigged election, and it was just one of those little things. And it got away from us because Biden allowed every country in the world to rip off the United States. And I'm here to save our country.
Mr. President, on China, Mr. President, you said you have
China.
Please. You have said in the past that you aren't worried about allies growing closer to China as a result of your tariffs. And this week we saw Chinese President Xi Jinping visit with 3 of our allies. Should you be worried that they're growing closer?
No.
Mr. President, will you pick up the phone?
Nobody can compete with us. Nobody.
You said that you have a relationship with President Xi. Why not pick up the phone and call him and make a deal?
Oh, we're going to make a deal. We'll have a deal. I think we have I think we're going to make a very good deal with China.
Do you plan to reach out to him and call him?
I think that you will see we'll make a very good deal with China.
Mr. President Trump, you told me Marine One a couple of months ago. I like her very much regarding Prime Minister Giorgia Meloni. Will she be the one to mediate your relationship with Europe, do you think?
Well, I do like her very much. I think she's a great prime minister. I think she's doing a fantastic job in Italy. We're very proud of her. I knew her right from the beginning. I knew her as a very early prime minister, and I knew she had great talent. She's one of the real leaders of the world, and I'm very proud to be with her. I can't do better than that, right?
Yes, that's fantastic. Okay, we can close the press conference.
We should end the press conference. Yeah, please, go ahead.
Prime Minister, how quickly can you raise your defense spending?
Oh, well, Italy is the son of the nation now that they raised 2% as was requested.
It'll go up. Yeah.
Yes,
And
then Europe.
Is it enough?
As you know,
It's never enough.
Europe, as you know, is committed to do more. Is working on tools to allow and help the member states in increasing the defense spending, and we are convinced that everyone has to do more.
Prime Minister, are you ready? Are the retaliatory tariffs that were passed before and then suspended still on the table?
No, sorry, please repeat it.
The retaliatory tariffs that the European Commission passed and then suspended, are they still on the table if you cannot make a deal with President Trump?
I'm sure we can make a deal, and I'm here to help on that. I cannot deal in the name of the European Union. My goal would be invite President Trump to pay an official visit to Italy and understand if there's a possibility when he comes to organize also such a meeting with Europe. I think the best way is that we simply speak frankly about the needs that every one of us has and find ourselves in the middle. That's useful for all. I really, somebody calls me such a Western nationalism. I don't know if it is the right word, but I'm sure that to be stronger, and I have to find a way. I'm here to find the best way to make us both stronger on the two shores of the Atlantic.
We're gonna have very little problem making a deal with Europe or anybody else, because we have something that everybody wants. You know what that means, right? We have something that everybody wants. We're gonna have very little problem. So we'll see you in a couple of minutes. We'll be right there in the Oval Office. Thank you very much.
Thank you, Press. Thank you, Press. Thank you, guys. Thank you. Let's move. Thank you. Thanks, guys.
All right, there you have it. Unexpectedly live from the White House. President Trump there in the cabinet room, what was billed as a lunch. I suspect they're going to actually have something to eat now. They drew the blinds, let the cameras and photographers in, reporters asking questions. And interesting to hear from the president, who referred to Georgia Meloni as a great prime minister, very proud of her. I knew her right from the beginning, he said. She's one of the real leaders of the world. I can't do better than that. To which she chuckled and spoke to the chances of cutting a deal today. She said she was also there to invite President Trump to Italy for a formal visit. We've been listening and watching alongside Jordan Fabian, our White House editor. When you need to run out of here, let me know, Jordan. But classic, I guess, Trump here didn't have a sense that that was even going to happen. But this is a special relationship. What can she unlock, not just for Italy, but for the EU?
Well, what you said there was really important, what you mentioned about trying to get the president to come to Europe for a meeting. The Europeans are not expecting a deal from this meeting this week, nor were they expecting one earlier this week when EU officials were here, but they're hoping to draw the president out into a broader discussion, hopefully get him to agree to come to Europe or meet with Ursula von der Leyen, the European Commission president, at some point to try and iron out these differences. So it's almost like an agreement to keep talking rather than an actual trade agreement. Keep in mind, they have that 90-day period to negotiate, but that's not really a lot of time when it comes to complex trade negotiations like this.
Yeah, of course. When you talk about Italy, if there was something, I guess, to be hashed out, it would still have to be approved by the EU, right? Could there be a bilateral agreement between the U.S. and Italy?
It's an interesting question. The EU, he applied these, so-called reciprocal tariffs on the EU as a block, and so they would probably want those to come off as a block. That being said, all these different countries have their different equities in trade negotiations. Ireland, for example, has huge pharmaceutical production that goes to the U.S. they're worried about these sectoral tariffs in addition to the EU tariffs. As you mentioned, Joe, your prize Brunello in Italy. So all these different countries have different exports they're worried about.
Sure.
Autos is a big one too.
Yes.
And so,
you could have carve-outs for Ferraris and wine, presumably, if they're from Italy.
Yeah, we'll see how this all ends up. I mean, the president has kind of done these negotiations on a whim. It's really based on his own personal feelings. So this isn't your dad's or your mom's trade negotiation.
God, how true. Just broadly, you've spent enough time covering the White House to appreciate the significance of a state visit with all the trappings, the state dinners. How come we're not seeing those at these visits in this White House? It's kind of it's a different approach, obviously. Who's going to rise to the level of getting that kind of attention?
We'll see. The president has, frankly, alienated a lot of the traditional U.S. partners who would typically be invited to that kind of state dinner.
Yeah.
I will say that those state visits don't usually happen at the very outset of a new administration. It'll take a few months typically, but countries like Japan, the UK,
whoever came to the table first.
Yeah, I mean that could very well be it. I mean, Trump is a transactional guy. He could say, hey. This is just a hypothetical, but in these trade negotiations say, if you're the first one to come to the table, we'll give you a nice state dinner in the East Room there.
So that might be part of the whole bargain here.
It could very well be.
Fascinating.
Yeah.
And who wouldn't want the treatment? I have to ask you quickly about Powell calling for his termination here. The Truth Social was really something, and it comes off the Fed chair's comments yesterday. Too late, always too late, and wrong. Following an interest rate cut on the other side of the Atlantic. He's not really going to fire him, though, right? He told Bloomberg he wouldn't fire him.
That's what he said over the summer. This is a president who likes to change his mind. We don't have any indication one way or the other what he's doing there. In the past, I think he's been, look at what he did pulling back from the broader reciprocal tariffs. He saw signs in the bond market. He reacts to the markets. I think if he were to move to fire the Fed chair, there would be quite a market reaction.
Oh, God, can you imagine? Yeah. No one's talking about a shadow Fed chair today, are they, at the White House?
Not that I've heard.
It was an interesting story, too, from our conversation. Thanks for being with us. Jordan Fabian, of course, who's going to be heading back to the newsroom, I'm sure, to distill everything that we just heard from the president and the prime minister. Again, I don't know what this means for the schedule. Are we late now? Are we early? I have no idea. There was something scheduled for 1 o'clock, 1:05 p.m. Eastern time in the Oval when they actually come out of lunch for the bilateral meeting. Will they say all the same things again? Maybe they'll cancel the reporters. This is why we're live. We'll find out together. Now, with the remarks that we just brought back to you about Jay Powell, we've got the markets in mind, of course. And standing by to cover Wall Street for us today is Amy Morris. Let's check on how the indexes are doing before we move on. Amy, how's it look?
All right. Thank you, Joe. Stocks edging, well, I want to say higher, but some are in the red right now. We're going to look at this. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.7%. NASDAQ up 0.2%. But the Dow, it's down 0.8%. The 10-year Treasury yield at 4.31% and the 2-year yield at 3.78%. Want to remind you that the bond markets will be closing at 2 o'clock Wall Street time today. President Trump just mentioned it. A trade deal with the European Union, he says, is possible. That moved oil higher. WTI is now 3.5% higher, and Brent crude now 3.2% higher. United Health Group cut its annual forecast and reported its first earnings miss in more than a decade. That caused shares across the insurance industry to tumble. The company blindsided by rising medical costs, particularly in its Medicare Advantage health plans and Optum healthcare delivery business. Those were affected by Medicare payment changes. Shares of United Health Group are now 23% lower. And Treasury Secretary Scott Bessent hosting private meetings with the Federal Reserve and other bank agencies, trying to streamline oversight and coordinate plans to ease regulation. Treasury is expected to take the lead on crafting recommendations on the policy agenda, which will firm up after the Senate confirms President Trump's nominees for the regulators. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much, and thank you for being with us here on the Thursday edition. It's our early edition. We do this twice a day. We'll be back for more at 5 p.m., and you know a lot's going to happen between now and then. We're also waiting for more at the White House, as we've told you, a 1 p.m. Oval Office meeting between President Trump and the Italian Prime Minister, Giorgia Meloni, who's in the building, and talking about the odds of cutting a deal We'll see if that leads to something bigger, because, of course, it's really the EU that we're talking about here, not individual European nations. Then again, that could be reinvented when we hear from them a little bit later on. Wonder what they're serving for lunch at the White House. Do we get a readout on that? I'll let you know what we learn. With possible signs of life in the news today. Not at the White House. There seems to be a lot of life down there. But beyond our orbit and our solar system. Did you see this story? This is pretty cool stuff, and it has to do with the remarkable scientists who use the James Webb Space Telescope. If you missed this in your social media doom scroll this morning, let me be the first to tell you that this is the coolest story of the day. This team of researchers offering what it contends is the strongest indication yet of extraterrestrial life. You've heard stories like this, right? They found some blob out there, maybe it had water on it. No, this is closer to the mark than we've ever come. A massive planet known as K2-18b, okay? That orbits a star 120 light years from Earth. Somebody's writing a really cool movie around this, I hope, already. And the reason why it works out is because the two gases involved in Webb's observations of the planet are generated on Earth by living organisms, suggesting that the planet may be teeming with life. This is the kind of stuff we live for, right? This idea of hope beyond our own horizons. Unless the Doge is knocking, and this is something that we need to spend some time with Keith Cowing talking about. If you look at the approach that the Doge is making to not just NASA, but this particular program, Space.com suggesting the team overseeing NASA's James Webb Space Telescope have been directed to prepare for up to 20% in budget cuts that would touch on every aspect of the flagship observatory's operations. Keith Cowing's NASA Watch has been all over this as well, and he's with us right now. We usually have a launch underway when we get to talk to Keith, the editor, NASAWatch.com, astrobiology.com, former scientist with NASA. But we just get to talk today, Keith, and I'm wondering if this is something that worries you, or you're going to tell me, Joe, they're going to make it even more efficient, and the Webb telescope's going to work better than ever.
Well, here's the thing. You make this discovery, and I don't want to put too much dampening on it, but it is kind of interesting. And it does cost money. The Webb cost us tax dollars a lot of money. The thing is doing more than it was ever expected to do, and it's making these discoveries as promised. So you hear all this talk about make America great in space again and all that. So what is their solution? Cut the funding to the people who are doing that. So it's a bit of a conundrum. Do you want the space stuff or not? You know, but in terms of the discovery itself, you know, I'm an astrobiologist by training. I used to work at NASA, blah, 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 blah. Did they find evidence of life? No. Okay, just to answer your question, there's no proof that there's anybody, little green man or anything like that, living there, okay?
Understood,
but
sure.
They found something in the atmosphere that on Earth comes from plankton and so forth in the ocean. Now, you can also say that it comes from pollution, so maybe we found a world that's polluted by aliens. Or there are other reasons why it could be there. But, again, this is so far away. It's like, you know, 124 light years. That's like 700 trillion miles. And they can see this sort of stuff. If they could see this, and maybe it isn't what they think it is, they can see this stuff. And they can look elsewhere. So it may be more about learning how not to find things and then eventually find it. And you got to make, you know, mistakes once or twice before you get things right.
I love that. That's just perfect analysis and context from Keith. Put the cuts in context then. If you're working at the Space Telescope Science Institute in Maryland and you've got to lop off 20%, what does that mean for your future innovation?
Well, right off the bat, if you read these papers, they say, hey, you know, we looked at this planet and we see this stuff. We need to go back and get maybe 10 or 12 more hours, you know, of use with the Webb telescope. That means a bunch of people have to point it and watch it and get the data and so forth. And they're not the only ones using the Webb. There's people all over the U.S. and all over the world. If you cut back the ability to study this stuff, you cut back the science, and it may take you longer to get your answers because you may have to wait an extra year to get that observing time. So, you know, money equals science. More money, more science. Less money, less science. It's simple. It's math.
That's okay. Well, you made that pretty simple, and I'm guessing that goes for the agency as a whole. What's Doge going to do to NASA?
Well, it's an ever-changing thing. I mean, first of all, I started NASA Watch 30 years ago when there was another reduction in force, and I tried to shut it off then. I couldn't. I tried to retire this time, and it came back. This time it's coming back with a vengeance. And oftentimes you think that Doge looks at the cost of things, but not the value. And that can be problematic, especially with things like web and the space science. And just imagine this: you're in your dream job. You could make more money outside of the government, but you could do science for food if you had to. And now they're saying you've got your dream job, but we're going to cut 1/4 of your staff. Figure out how to do it, and we're not going to tell you who's going to get cut until the last minute. All right, I'm sitting there with a dream job on one shoulder saying it's good, and then you got Doge on the other shoulder saying you're probably out of here. So how do you function in that environment? Luckily, people are pretty motivated at NASA, so they're still going.
Keith Cowing says they keep pulling me back in. Enter Jared Isaacman. I want to know your thought on this because I think you're a fan based on our prior conversations. This is the new NASA administrator. Here's a moment of him in a back and forth with Senator Ed Markey in his confirmation hearing just last week.
Was Elon Musk in your meeting when Trump offered you the NASA position at Mar-a-Lago?
Senator, I was interviewed by the President of the United States.
Was Elon Musk in the meeting when he offered you the job?
Senator, my meeting was with the President of the United States.
So Elon Musk was not in the meeting, is that what you're saying?
Senator, I was being interviewed and speaking with the President of the United States.
You can just say he was not in the meeting. Was he in the meeting or not in the meeting?
Senator, I'm trying to be as transparent as I can. I was being interviewed by the President of the United States.
Keith, I'm not going to ask you if Elon was in the meeting, but you've got a billionaire here, a pilot, a commercial astronaut, and an innovator, and someone I believe, could help to reinvigorate this agency and maybe spend less money. Can he do more with less?
Yeah, look, I've been a reporter covering the answer for 30 years, and I've done gotchas like that. Yeah, did you, or whatever. I mean, it's a classic thing, and, they do it in the Congress, too. But, when you here in Washington, when you have a meeting with the president, there's like 5 Secret Service guys in the room, 5 or 6 aides. They're there just to be, accessories. Yeah. The meeting was between him and Trump. And that, you don't talk about that. That's just kind of the way it works in Washington. That said, do I think Jared's the man? Yeah, I do. I really do. He's doesn't know any better than to read science fiction and to take something that he wanted to do as a little kid, and as he got rich, by coincidence, he could go make those dreams happen. And he flies in space, and he makes sure his crew is diverse. It's half women, half men. They do science, go out of their way to be the pin cushions for the needles and all that. And oh, by the way, a lot of people are talking about the 6 women who went to space the other day, saying it was whatever. He raised $250 million for St. Jude at the same time. So if I'm going to look at somebody a billionaire who's going to run NASA, you want one with a heart, you want one with a vision, and you want one that pays attention to the real world as he makes these difficult decisions. So, I mean, if I were working there now, I'd be very comfortable with him about to come on board.
Does Elon Musk play a role in that, or does this not matter because he's on a plane to Texas soon?
I've known Elon. Everybody's known Elon forever. I mean, Elon is a presence. He has a company which is composed of thousands and thousands of very smart people who are creating a technology that makes it easier and more cost efficient for NASA to do things. So he's a factor, but he's going to be a factor like Jeff Bezos and a whole bunch of other people. The trick for Isaacman is to step beyond that and think of the American people's interest in their space agency and the exploration of space, and he brings this up all the time, inspiring young people to want to join in and be part of that adventure. To me, I'm about to turn 70. I'm a child of the Apollo era. Nothing is more important than grabbing kids at a young age, getting them fired up, and then giving them a path to become part of the adventure. So to me, that's the most important thing that Jared does, and he does it in spades.
Well, that's wonderful, and I appreciate the spirit of that comment, Keith. Does he have the charisma to convince Donald Trump of that? Obviously, Trump's very close with Elon Musk and has understood the benefits of privatization. What does Jared tell Donald Trump when they're alone?
Jared's he's walked the walk. He's flown twice. He's gone into space, and it's not without risk. That rocket could have a bad day. So you're taking a personal risk. I've been on expeditions to remote places. You're taking a risk, but there's a benefit that comes from that. And as far as, the whole what's going on in this White House. Look, I live 22 miles away and I can't figure it out. But, that said, you pick the right guy to be able to say to the president, 2 and 2 is 4, 7 days a week. You want to go do this great stuff in space. I can't do it for free. I can find some fat, but at some point you got to write a check. You got to give me the ability to get my inspired people back on track and then stand back, because we'll do some really cool stuff.
So these proposed cuts in our remaining moment, Keith Cowing, may not be fixed. This is still up for debate. NASA may, in fact, have the resources that it needs.
They may cut some parts and not others. Again, this is all a bunch of kabuki theater. You don't know who's moving the puppets around, and it changes in a moment's notice here. And as you now know, we don't have one news cycle every day. We have 17.
Oh, God, I know it's true. What if they just renamed Artemis the Trump program? Wouldn't that help get us back to the moon? Think about that.
I don't know. Artemis is sort of like, he sort of started it, and then Biden kept it going. So it's got the ability to transcend politics. I wouldn't touch it.
Great to have you back, Keith. Thank you for helping us make sense of this amazing discovery. I'm holding out hope here. I just don't think we're ever going to make it that far away. NASAWatch.com is where you can find the great Keith Cowing. We'll assemble our panel next. Rick Davis and Kate Little-Agaki are with us with the latest on mass deportations out of Washington and a visit from the Italian Prime Minister. It's all ahead on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. We bring you the markets all day long here at Bloomberg. The S&P 500 up 0.6%. NASDAQ up 0.1%. The Dow is down 0.9%. 10-year Treasury yield at 4.32%. The 2-year yield at 3.78%. A reminder, the bond markets will be closing at 2 p.m. Wall Street time today. President Trump said a trade deal with the European Union is possible. That moved oil higher. WTI now 3.6% higher. Brent crude more than 3% higher. And this morning, President Trump posted on Truth Social that Powell's termination cannot come quickly enough. He was, of course, referring to Fed Chair Jay Powell after his address at the Economic Club of Chicago yesterday, where he stressed the importance of the Fed's independence. Mohammed El-Arian, Queens College Cambridge president and Bloomberg opinion columnist, examines how continuous conflict between the president and the Fed is becoming an issue.
There's a real question for Chair Powell. Should he step down to preserve the independence of the Fed? Because otherwise, the Fed will be the subject of a lot of attacks going forward.
Bloomberg opinion columnist Mohammed El-Arian on Bloomberg Surveillance. Anna Paulson will be the next president of the Federal Reserve Bank of Philadelphia, replacing Patrick Harker. He's stepping down June 30th. Paulson, currently head of research at the Chicago Fed, will take office July 1st and be the first woman to lead the Philadelphia Fed. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much, and thank you for joining us here on the Thursday edition of Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121, and on YouTube. Search Bloomberg Business News Live. You can always find us on YouTube. Whether we're here in Washington or in New York, the stream runs all day. You can even get involved in the chat as we follow the adventures of Senator Chris Van Hollen. The Democrat from Maryland is back home, we can tell you. He became the first Democrat, not first lawmaker, I will tell you, but first Democrat to travel to El Salvador. He went down there just about 24 hours ago. And of course, you know what's going on there. If you've been paying attention, this is where the maximum security, or mega prison, as they call it, exists in San Salvador. You saw the leader of El Salvador in the Oval Office joking with Donald Trump about a man from Maryland. See, we'll connect the dots here for you, who they say was wrongfully or erroneously deported to this horrible prison full of terrorists. Kilmar Armando Abrego Garcia, unless you've been living under a rock, you probably know what he looks like. You probably know what his family looks like, too. The Supreme Court ordered his return, ordered the White House to facilitate, was the word, his return. But everybody's putting their hands up in the air, right? El Salvador says we can't smuggle a terrorist back into the U.S. He's not a citizen. White House says we can't just walk down to another country and bring him home, and they were kind of laughing about that, which is why this is still bound up in court, and why Senator Chris Van Hollen went to El Salvador. Now, he was not invited as a lawmaker. This wasn't some kind of official codel. He bought a ticket on an airplane and went down there, and as we saw on social media, he was dropping videos along the way. He created one at Dulles Airport, you saw yesterday with Kaylee. And he made another when he arrived. Here's Chris Van Hollen via Twitter.
I've had back-to-back meetings here in El Salvador with our team from the American Embassy, with the Vice President of El Salvador, with human rights groups. And the entire purpose has been to bring Abrego Garcia home, because U.S. courts have determined that he was illegally abducted from the United States and now finds himself in the most notorious prison in El Salvador.
He is in that prison. And by the way, if you ask the White House, they will tell you that he is a terrorist who is part of the gang MS-13. In fact, the Attorney General, Pam Bondi, just yesterday, uploaded criminal files to the Department of Justice's website. You can see them yourself. As I read this morning, from an arrest in Hyattsville, Maryland, that brings us back to the 28th of March, 2019. And Mr. Garcia is described in here as a gang member, an active member. I'm reading it directly from the document put forth by the Attorney General. An active member of MS-13 with the Westerns clique They even refer to his rank and his moniker. So what exactly is the senator going to get for this? We assemble our political panel for their take and on this and a lot more. Rick Davis is with us, Bloomberg Politics contributor, our Republican strategist, of course, and partner at Stone Court Capital. And Democratic strategist Caitlin Legacki is back with us on our panel as well. Caitlin, great to see you. Rick, welcome back. This is interesting, Rick Davis, because you know what is involved, having, of course, worked for so many years with Senator John McCain, what it's like to go to another country where you may not be welcome and leadership may not want you to be visiting. Was this a smart move for Van Hollen? What does he get for his efforts?
Well, I think he's obviously trying to keep the issue on the front burner for America, for the press, and for opinion makers. So in that regard, I think he's basically accomplished his goal. We're talking about it today. It's been on all the news.
Yep.
And even though he wasn't successful meeting with Abrego Garcia, he is keeping constant the issue. So job well done. And it's not unusual. I mean, in many of John McCain's travels, we would try to see political prisoners and whatnot, and they weren't ever given access to the senator. So this is not a uncommon thing, and I'm actually surprised that there hasn't been more attention spent on talking about the sort of totalitarian nature of Bukele, the president of El Salvador in his reign, because that is part of what has been facilitating this relationship, keeping Garcia in confinement.
Caitlin, there's a representative by the name of Riley Moore, a Republican from West Virginia's 2nd District in Congress, also went to El Salvador. He did not come home with his hands in his pockets. He actually got into the prison, and he posted selfies where he's actually photographing himself thumbs up in front of this mass, incarceration of terrorists all jammed into, or alleged terrorists all jammed into a cell together. Tattoos are showing. They've got their tops off. And he describes the tour of the prison. How come certain lawmakers are being given access and others are not? This is a U.S. senator went down there and couldn't get near it.
Yeah, I mean, I think it just speaks to the partisan nature of how the Trump administration and, the El Salvadorian president are handling this. But the bottom line is it's just kind of gross behavior, right? Like, these are still human beings, and they are incarcerated in a really notorious torture dungeon. And so I think it doesn't speak well of the congressman that he posted those photos, but when you look at the facts of the case in Maryland, it just underscores why there should be a process for evaluating whether or not we are deporting someone. And really, that's what's the question here is, why aren't the people we're sending to this torture prison getting a process, getting a fair hearing to decide whether or not they are gang members? Because there's been a lot of confusion, both about this case, but some of the other deportees as well, and whether they are actually criminals or whether they are actually gang members. And I think we have to be disciplined about decoupling these two issues, because really, fundamentally, this is about making sure that we're not sending the wrong people there, making sure that we're not sending American citizens there, because once you send them, it's really hard to get them back.
Yeah. I'm looking at this Prince George's County Police Department gang field interview sheet that the Attorney General made public yesterday. Caitlin, as I mentioned earlier, it's March 2019, the arrest on East-West Highway in Hyattsville, Maryland, where he is, without any doubt here or caveat, referred to as an active member of MS-13. They mentioned the clique, his rank, and his moniker, his nickname in the gang. Rick, is this meaningful? Does this end the debate for some people?
Look, I mean, I think you just got to deal with the fact pattern. Obviously, this is an important fact pattern, but it's not like Abrego Garcia was prosecuted for that, right? I mean, he was on a deportation order, but it was very clear with the immigration judge on the deportation order that said he could not be sent back to El Salvador. So he was subject to deportation. He was not subject to deportation to El Salvador. And so the judge in this case, all the way up to the Supreme Court, has made it clear that the president has the right to deport people, and the president has upped the ante by using these emergency powers to do it without due process. That is within the rights that the president has, the powers the president has. But in this case, it's very clear that either the administration is ignoring a judge's order, or it is just been very, very lax in implementing it. And you really have to scratch your head and wonder, what do they hope to accomplish here? Because if there's one thing that is a fact in this case, is the judge said he could not be deported to El Salvador, and another judge has said he has to be brought back because of the violation of that order. And the administration, regardless of anything else that's in the file, is obligated to do what the judges tell them to do.
Caitlin, a terminal user is asking, is this Maryland dude a U.S. citizen? If no, he has no constitutional rights. I don't understand this conversation. Why should he be given due process?
Because due process is how we figure out whether or not someone is a U.S. citizen. Without due process, we have no way of knowing whether or not we are sending someone who is a U.S. citizen and has rights to a third country's torture dungeon. This is very much a case of shooting first and asking questions later, where when it comes to these very serious legal issues and these life-altering events, we should err on the side of making sure that we're not making those mistakes. And so without due process, there's no way to guarantee that Americans have access to their constitutional rights.
Rick, are we going to see a Senate delegation, a Democratic delegation, head for El Salvador here?
You might. Let me just say one thing, though. Everybody, whether you're a citizen or a non-citizen in the United States, has rights to due process. We are a country that believes in our laws, and we believe we want to respect human rights. That is the nature of what makes us different than most of the other countries in the world. And so regardless of whether you've come here illegally or that you are here on a certain immigration program that allows you to be here, but also restricts things that you can do when you're here, you are given human rights by virtue of our Constitution. And so we are blind when it comes to how we treat people in the courts, whether you're rich or poor, whether you are a citizen or a non-citizen. And so I just think we have to remember who we are, and the moral authority that we have around the world is because we don't treat people badly. So secondly, I think that, yes, this issue is not going away. Why the president and the administration doesn't just obey the judge's order, it makes this all moot. But for whatever reason, the administration wants to go to war with the judiciary on this issue, and it's game on for a lot of these folks in Congress. They're going to take advantage of it.
The fact that he has a family here married to a U.S. citizen matters as well, Caitlin, right?
I mean, I think it does. And, at the end of the day, this is just a really tragic series of events for those people. And so, like Rick was saying, these are still human beings. And I think that's what we kind of have to get back to.
Well, this is a conversation that is apparently not ending anytime soon. We've done a number of panels on this, and I suspect there will be more. I appreciate your insights, both of you. Interesting to hear you both agree on due process from both sides of the aisle. Rick Davis and Caitlin Legacki will be back soon in our second hour here on Balance of Power Thursday edition with Georgia Maloney in town. We're going to be talking a lot about tariffs in our next hour as we bring you into the Oval Office for a conversation between the president and the prime minister. We do have a headline crossing the terminal here that's important, and it plays right into this. The EU weighing export restrictions on the U.S. if trade negotiations fail. And you could frame today as part of those negotiations. Of course, this is between the U.S. and the EU, not each member country. But many see, because of their relationship being as good as it is, the respect that they have for each other, many see Maloney as being the ultimate emissary for the EU. This could be today a potential ball mover and market mover. As I mentioned, they'll be in the Oval 1:05 p.m. coming out of lunch. Who knows if they're on time, but we'll bring you in the room for their conversation once it begins. Kaylee Lyons on the way in, too, and we'll have more, as I mentioned, with our panel. Rick and Caitlin have much more coming. I'm Joe Matthew in Washington. Glad you're with us here on the radio. Our global television audience on the way on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Thursday edition with the Prime Minister in the Oval. Thanks for joining us as Giorgia Meloni becomes the first European leader to meet with President Trump since the reciprocal tariffs were paused. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us on the Thursday edition here on Bloomberg TV and radio. This is an interesting one here, Kaylee. We know they like each other. They've got a great relationship, but he doesn't speak for the EU, and you wonder how much they can get done.
Well, that is the question. He did express optimism on reaching a deal, which he described as something that would be a fair deal with the European Union. And Meloni said she wants to extend an invitation to Italy to meet with other European Union leaders on this issue. But keeping in mind that the president also told reporters in the cabinet room when they were sitting down for lunch earlier that he's in no rush to actually ink these deals.
That's the story, at least for today. But presumably, we could have some carve-outs here for an EU member. Maybe it's Ferraris and wine we were speculating a little bit earlier. There are some things that he could do, I guess, to help Giorgia Meloni. No state dinner, but there will be a bilateral meeting in the Oval, and we'll get an ear on that hopefully soon.
Yeah, we're expecting the press will be invited in and the president to take more questions from them, which could include not just things on the subject matter of trade and tariffs, but also possibly on, I don't know, the chair of the Federal Reserve after the president took to Truth Social today, calling him too late, Jerome Powell, complaining basically about his lack of cutting interest rates right now, and says his termination cannot come fast enough.
Too late and wrong, I believe. Always wrong something. Look, we also know that he spent the first term doing that on the regular. Maybe it does because he did tell Bloomberg, remember last summer, he had no intention of firing Jay Powell.
Of course, there's also a massive legal question as to whether or not he actually has the authority to do that without cause. We have a lot of questions. We'll get into that with Michael McKee in just a moment. But we begin, as always, with the markets, which have to feed Fed news and the tariff news and everything else through them. And Amy Morris is checking on that with us from Washington. Hey, Amy.
Hey, Kaylee, stocks are starting to climb now. Oil rising to a session high. We do check the markets for you all day long here at Bloomberg. The S&P 500 now 0.8% higher. NASDAQ 0.3% higher. The Dow is still in the red, down 0.7%. The 10-year Treasury yield at 4.32% and the 2-year yield at 3.8%. And a reminder that the bond markets will be closing at 2 o'clock this afternoon, Wall Street time. Google was found by a federal judge to have illegally monopolized some online advertising technology markets, a blow to a key part of the company's business. The ruling is a second major blow to Google. It was already found to have monopolized the online search market in a separate case. So this ruling does increase the odds that Google may be forced to dismantle much of its ad tech business. Google shares now about 2% lower. United Health Group cut its annual forecast and reported its first earnings miss in more than a decade. That caused shares across the insurance industry to tumble. The company was blindsided by rising medical costs, especially in its Medicare Advantage health plans and Optum healthcare delivery business. Those were affected by Medicare payment changes. Shares of United Health Group now down 22%. Hertz shares, check it out, 47% higher today, extending yesterday's record 56% jump after Pershing Square disclosed it bought 12.7 million shares, valued at about $46.5 million at the time of purchase. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go to Balance of Power now with Joe Matthew and Kaylee Lines.
All right, Amy Morris here with us in Washington. Thank you so much. Of course, there is a meeting underway right now at the White House here in Washington between President Trump and the Italian Prime Minister, Giorgia Meloni. We expect we will hear from the two of them shortly as reporters are led in to the Oval Office. And in the meantime, I wonder if President Trump is making some comparisons between the central bank Meloni is working with right now compared to the central bank that he is working with. The Fed and the ECB obviously on two different tracks as the ECB cut rates for a 7th time today. And the chairman of the Fed obviously signaling that the Fed is going to stay on hold. President Trump taking note of that, not too happy with it. As he posts on Truth Social, too late Jerome Powell of the Fed, who was always too late and wrong, yesterday issued a report which was another and typical complete mess, going on to say too late should have lowered interest rates like the ECB long ago, but he certainly should lower them now. Powell's termination, Joe, cannot come fast enough.
Okay, so fast forward to Section 10 of the Federal Reserve Act, and you start wondering exactly what authority the president has here. That's why we wanted to spend some time with Mike McKee. He knows this stuff inside and out, of course. Bloomberg International Economics and Policy Correspondent with us from World Headquarters in New York. Mike, great to see you. I'm sure your antennas went up as soon as the Truth Social post went here. Here's the deal. Can be, quote, removed for cause by the president, unquote. Does not cutting rates equal cause?
No, that's the general consensus of the legal world. I must say that so far the consensus on social media is that always late is probably the worst nickname Trump has ever given anybody. It just has no rhythm to it.
Always late and wrong.
Traditionally, for cause has been seen as malfeasance or illegality, something like that. A policy difference is not for cause. However, this president is not traditional, and he has tried to fire people who, in theory, he could not because they had for cause clauses in their founding acts, including the head of the National Labor Relations Board. And that case has been going back and forth through the court system. She's been hired and fired back several times by different judges. The Supreme Court hasn't agreed to necessarily take that case yet, but Chief Justice John Roberts has issued a stay of an appeals court order that ordered her back to work. So the suggestion is the court may take it. Now, if the court does rule against Gwynne Wilcox, is the woman's name, then there is some thought that that could apply to the Fed as well. However, there is one other, and I'm going to bore you with this information. There's one other case called Sela Law, which was when the administration tried to fire the head of the Consumer Finance Protection Bureau, and the court ruled that a single agency head, independent agency like the CFPB, the president could get rid of. But the Fed is not a single head. While Jay Powell is the chair, it's a 7-member board, and the actions the Fed takes can only be taken because the entire board agrees. So that was the basis for why Jay Powell said yesterday in Chicago that he didn't think that the lawsuit that is proceeding on the NLRB would apply to the Fed. But Donald Trump, that's all you got to say. Nobody knows.
Well, yeah, and of course, this isn't necessarily a new topic of conversation. As Joe alluded to, the president has expressed displeasure with Jerome Powell before, which is why yesterday, before this True Social post even hit, when he was speaking at the Economic Club of Chicago, Chairman Powell was asked directly about this question of independence and whether he could be fired. This was his response, as you heard live in the room, Mike.
Our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties.
And it seems that there's support from elsewhere in the administration for Fed independence, Mike, even if not from the president himself. It was just on Monday that the Treasury Secretary Scott Bessent told our colleague Anne-Marie Hordern that the independence of monetary policy is a jewel box that needs to be preserved. Does that actually maybe indicate that there are voices who would act to check the president on this one?
Well, I think there definitely are voices. Anybody who's had experience with financial markets would know that any attempt to fire the chairman of the Fed would be received very badly. And there's a report from Politico today that Scott Bessent has been over to the White House saying, kind of knock these tweets off the idea. Don't say you're going to fire him. And there was a report earlier that a senior White House official was saying this wasn't a threat. This was just the president venting. Now, that's going to keep happening. Nobody's going to shut Donald Trump up, and when he doesn't like something or wants something out of the Fed, like everybody else, he's going to attack them. So the question is really, does he follow up? And probably he wouldn't make a decision until the National Labor Relations Board decision comes down from the Supreme Court, and he gets advice on whether it could possibly apply. So I don't think there's any danger in the short term this is going to happen, and probably we won't hear more from the president, given everything else he's doing right now, until we get close to the next Fed meeting on May 7th.
All right, which of course Michael McKee will have covered for us as always. Bloomberg International Economics and Policy correspondent joining us from New York. Thank you so much. And as we consider, Joe, the kind of legal questions here, it was just weeks ago after the firing of the 2 Democratic commissioners at the Federal Trade Commission that we spoke with then ousted Commissioner Rebecca Kelly Slaughter, who told us, look, if it can happen to me, there is nothing to say that it's not also applicable to the chair of the Federal Reserve.
Connected the dots straight to the top of the Fed as we're discussing here today. Look, I don't know. There are a lot of different ways that you can look at this. We'll see if they try to establish some sort of cause, or maybe just the president having a cathartic moment online. It wouldn't be the first time.
Oh, no, it certainly would not. So on that note, let's turn to our political panel, who is all too familiar with us asking them about each and every post on Truth Social. Rick Davis is with us, partner at Stonecourt Capital and Republican strategist, alongside Democratic strategist Caitlin Legacki today. Rick, I do wonder if you see this as just venting, or when the president says that someone can't be terminated fast enough, that he's suggesting he wants to do that in short order.
Yeah, look, I mean, we have to look at what this administration has been doing, and they are testing the powers of the presidency on a systematic basis by taking actions that heretofore have been considered extra legal and letting the courts tell them whether or not it's okay or not. And I think it's kind of an 80-20 thing for this administration. I wouldn't be surprised that there isn't a conversation that's been had, not just a random Trump tweet, that is why in the world wouldn't the president have higher fire authority over the leadership of the Fed, regardless of who's in charge? And should we try to test that in the courts? Because he's got a compliant Supreme Court. They are more likely to be supportive of his strong executive branch actions than any other court we've seen in a long time. And so I see no reason why this doesn't fit into that same category. Whether it's a good idea or not, I mean, we would want to defer to Secretary Bessent, who says that it's a jewel box, and I like jewel boxes. We should keep those.
No, the jewel box, or if it's the lock box that Al Gore was talking about here. Caitlin, in an interview with Bloomberg Business Week on June 25th, right, so less than a year ago, this is campaign trail. Donald Trump said if reelected, he would let Powell finish his term, adding, quote, especially if I thought he was doing the right thing, unquote. Which Trump do you believe?
I believe the Trump that's tweeting in the middle of the night. He's very skilled at telling people what they want to hear in the moment that he's trying to get what he wants. But we have seen over and over again that Trump does not like it when people put up any sort of resistance to him or his goals. And it's clear from his Truth Social posts or his tweets or whatever you want to call them that he's getting very frustrated with Powell. And so I think it's hugely concerning. I think that they're absolutely trying to test the fences and see what they can get away with. And I wouldn't be surprised if they try to see what is on the table in terms of changing leadership at the Fed.
Well, as we've been discussing, Caitlin, a lot of that may actually be left up to the decision of the Supreme Court in the NLRB case, given that we have seen kind of splits in the justices in terms of when they are and are not willing to rule with this administration on the efforts it's made in the last nearly 90 days. How do you expect the court ultimately comes down on this, knowing that it hasn't always been kind to kind of regulatory authorities in general?
Yeah, I think that Rick was right when he said that Trump's working with a compliant and a friendly Supreme Court. I think where there is some measure of hope for Democrats or Powell supporters or people who are just opposed to Trump is that ultimately someday the shoe will be on the other foot. And I think there are a number of, Supreme Court justices who wouldn't want to extend that same power to Democrats. Or progressives when they are in power. And so I think that's an important kind of seatbelt and restraining factor, keeping some of these norms in place. But it's still very much the kind of court that seems inclined to expand executive power.
There was a time, Kaylee, we were talking to Scott Bessent before he got the job. This also was during the campaign, about the idea of a shadow Fed
That's
chair.
right.
And we haven't heard a lot about that idea since. You wonder, Rick Davis, if maybe that's, forget firing the Fed chair, but could you cut him off at the knees or lower his authority by putting in place a shadow chair, doing something like that to check Jay Powell without actually showing him the door?
Yeah, I think this is the distinction between, are you upset with the individual Jay Powell, or are you upset with the actions of the Fed? And if you're upset with the actions of the Fed, he's indicated as much in his recent tweet. He likes what the ECB's doing. They've cut rates 7 times in the last 8 meetings. That's what he wants. Cut more rates. Give me lower interest. It'll help me get over some of the effect of inflation on the because of the tariffs. And so I think it's more driven by I think policy. And so he's going to try and work the ref and make it very uncomfortable for Powell not to be more aggressive on rate cuts. And I think he's going to try and look, I'm sure, at like what are the options to be able to pack the Fed with people who will be more compliant to his point of view. And in that regard, that's a game that other administrations have played for as long as there's been a Fed. And whether or not you could actually get somebody in there who's a shadow governor, who has so much access and authority to Trump that they would overshadow Powell, I think that's a real long shot. I think he's back to saying, hey, I want to get rid of Powell. I want someone in there who will do my bidding. And by the way, that's what he's done in every agency right now that reports to the executive branch.
But not every agency has the kind of sway over financial markets that the Federal Reserve does. And Caitlin, Mike McKee was just alluding to this notion. We already saw last week President Trump looking at what he described as queasiness in the bond market, and under guidance from Commerce Secretary Howard Lutnick and Treasury Secretary Bessent, decided to pull back his tariff policy. What's to say that the threat of financial market disruptions will not also be a deterrent to him perhaps acting on his impulses when it comes to Chairman Powell?
I think that's the main thing and the only thing that is keeping him from acting on his impulses related to Powell. Because it does, if he takes the unprecedented step of trying to fire Chairman Powell, the markets will freak out. And I think it feeds into a larger narrative that Trump is facing headwinds on right now, which is that he is acting recklessly to ruin the economy. And this would simply feed into that. And so I think it is appropriate that Scott Bessent has raised these issues with him. I think it is pretty much the only thing that's keeping Trump in check right now. But it's a real concern, and I think it's a very powerful deterrent that is working in Powell's favor.
Fascinating conversation with our panel. Rick Davis and Caitlin Legacki, thank you both for being with us today on the Thursday edition. We'll let you know, of course, what transpires on this front if we hear any more from Donald Trump. We are going to be hearing from the president, we expect, a bit later on this hour from the Oval Office in his bilateral meeting with the Prime Minister of Italy. Giorgia Meloni is in Washington and in the White House. And Kaylee will talk a little bit more coming up here as we bring our listeners and viewers to the White House about reciprocal tariffs and whether Italy can carve out a deal on its own.
Yeah, especially when the administration's looking for not just action on tariff, but non-tariff barriers, maybe defense spending as well. We'll get into all of that ahead here on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Amy Morris. Stocks are mixed on this last day of a holiday-shortened trading week. We bring you the markets all day long, checking them for you here at Bloomberg. S&P 500 is up 0.4%. NASDAQ down 0.1%, and the Dow is down 1%. The 10-year Treasury yield at 4.33%, and the 2-year yield at 3.79%. The bond market, by the way, closing at 2 o'clock this afternoon, Wall Street time. Google was found by a federal judge to have illegally monopolized some online advertising technology markets, a blow to a key part of Google's business. The ruling is a second major blow to the embattled tech giant, already found to have monopolized the online search market in a separate case. Now, this increases the odds that Google might be forced to dismantle much of its ad tech business. Google shares now 1.5% lower. Anna Paulson will be the next president of the Federal Reserve Bank of Philadelphia, replacing Patrick Harker. He steps down June 30th. Paulson, currently head of research at the Chicago Fed, takes office July 1st. She'll be the first woman to lead the Philly Fed. Police are on the scene of a shooting on the Florida State University campus. We are just getting details on this. A number of people taken to the hospital. Details are still unfolding as students are sheltering in place on campus, and the FBI is on the scene. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back to Balance of Power now with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Keeping an eye on the markets from here in Washington, while Joe Matthew and myself are keeping an eye on the White House, where we are still waiting for the doors to open back up. In the meeting between President Trump and the Italian Prime Minister Giorgia Meloni, they, of course, spoke to press briefly in the cabinet room as they were sitting down to lunch. They're expected to once again take some questions in the Oval Office really any minute now. But noteworthy, of course, that this visit is coming when it is and with who it is, considering Giorgia Meloni may very well be one of the closest allies President Trump has in Europe, most ideologically aligned perhaps, and she's here as an emissary for the wider European Union to talk trade.
That's right. And of course, to speak about maybe some carve-outs for Italy, which I suspect we'll be hearing about. We actually saw them both together at the beginning of their lunch. They gathered in the cabinet room, let reporters in for a couple of questions. I think she's a great prime minister, he said. We're very proud of her. I knew her right from the beginning. She's one of the real leaders of the world. And he looked up and said, I can't do better than that. And she had a chuckle. So clearly, this is going to be a little bit different than a meeting with some other European leaders who may be in Washington. Not an accident. And Bloomberg's Tyler Kendall is at the White House right now, ahead of their meeting in the Oval Office. Tyler?
Yeah, hey, Joe. Well, you said it there. President Trump really greeting Meloni with some high praise, as this meeting is largely seen as a test of their relatively warm relationship and whether or not that will be enough to push ahead trade talks with the European Union, which our reporting indicates haven't really made much progress in recent weeks. Take, for example, earlier this week, Bloomberg News reporting that the EU's trade chief left a meeting here in Washington with very little clarity about what this White House needs in order to get a deal done. Now, for his part, President Trump did tell reporters earlier that he sees no trouble with getting a deal done with the European Union. He said he's confident, but also in no rush. He also said, as you're about to hear here, despite these ongoing negotiations, that 10% baseline tariff across the board could ultimately get a little higher, indicating that even as the talks are getting underway, there's likely no plans to abandon the tariffs completely.
We're getting a 10% baseline. We took that down just because it was, the appropriate thing to do until we decide what the number will be. And we're, taking in a lot of money, which we've never done before, frankly. With Biden, we were losing a fortune on trade. But we're moving along very nicely, and we're going to end up with a baseline of a substantial number.
Well, this White House has previously said that it would be looking for the European Union to boost its energy imports of U.S. LNG, for example, as well as has made a priority asking our allies to up their defense spending when it comes to NATO commitments. We'll have to see as this goes, because Bloomberg News reporting new today that the EU is actually working on a proposal to potentially introduce some restrictions on some U.S. exports if negotiations don't go as planned. So already starting to work on that backup plan here, as the Italian Prime Minister says that she's hoping President Trump will make an official visit to Italy so he can meet with some other EU leaders face to face.
All right, Bloomberg's Tyler Kendall live at the White House for us here on Bloomberg TV and radio. Thank you so much. And we want to get more analysis on what exactly we can or should expect coming from this meeting, and turn to Rachel Rizzo. Now, she's non-resident senior fellow at the Atlantic Council's Europe Center, joining us here on Balance of Power. Rachel, welcome back. It's good to have you. As we consider Giorgia Meloni as kind of the messenger and first immediate negotiator here, if you will, is she the best hope Europe has at trying to carve out a deal?
Well, I think so. I know that there's a lot of nervousness around the European Union that she would try to carve out benefits for Italy specifically, rather than coming to the White House and putting on a united front on behalf of the European Union. I'm not as nervous about that because I do think Prime Minister Meloni does understand that she's in sort of a special position here. She really gets along with Elon Musk, who, as we know, is very close to the president. And she has a very similar worldview, especially when it comes to domestic issues, as Trump and his team. So I think what this means is that she's a good bridge between the United States and the EU during this time. And she speaks this sort of Trumpian language that I don't think other European leaders know how to speak. I mean, I know that von der Leyen, for example, Ursula von der Leyen, the president of the Commission, would probably love to come to Washington and meet with Trump one-on-one, but he doesn't want to meet with her. He does want to meet with Meloni, and this visit comes after a special invitation from Trump and his team.
Well, so what does von der Leyen or the rest of EU leadership think about the role that she's playing today, the way you just framed it? Is she their emissary?
In a way, I think she is. I mean, as I mentioned, I think that there is some trepidation on behalf of EU leaders. You've seen some statements come out, talking about the fact that Meloni had a special conversation with von der Leyen, where von der Leyen did make it clear that she better come to Washington and speak on behalf of the EU rather than focusing specifically on Italy. You've had some statements from, ministers of Europe, for example. The French Minister for European Affairs, Benjamin Haddad, in the Foreign Ministry, said the same thing over the last couple of days, that if Meloni comes into Washington talking on behalf of Italy, the European Union's 27 members are going to look divided. And that is, at the end of the day, a benefit for Trump and his team. So there's a lot riding on this visit for her. But I do think when you look at the relationship she has with Trump and his team compared to all of these other European leaders, she's the best person, in my opinion, to play this sort of role as an emissary between the two sides. This is a super stressful time between the two, trying to hammer out a lot of issues in terms of defense spending and trade. And I think that she's cut out for the job.
Well, to that point, Rachel, administration officials briefed reporters earlier today ahead of the visit and said, well, trade and tariffs will come up, that it wasn't going to be the focus of their conversation, but that they were going to talk about things like cooperation in space or energy or defense. To your point, can we really, though, separate those other issues from the trade negotiations that they want to get underway, knowing that this administration has talked not just about trade-specific, tariff-specific barriers, but non-tariff barriers and other components that you wouldn't necessarily lump into a bucket with trade policy is still being contingent on the outcome of these negotiations?
Yeah, I mean, no matter what you say about these meetings or whatever the White House says about these meetings, trade and tariff barriers and non-tariff barriers are going to be a discussion here. There's really no way around it. But this is also where Meloni comes in a pretty interesting position because Trump has focused a lot on, for example, defense spending, not just during his second term, but on his first term, during his first term as well. He pushed NATO allies to spend 2% of their GDP on defense in line with NATO targets. And Italy is famously below that target. They're only spending about 1.5 of their GDP on defense right now. And so I think part of the other discussion that's going to happen in the White House today, there might be some stuff on Ukraine, we're not sure yet, but I do think Meloni is going to come in, as reports have said, and tell Trump that Italy is planning on getting to the 2% of GDP defense target that Trump and his team are really pushing. Now, unfortunately, this also comes at a time ahead of a NATO summit in June, where Trump and his team are expected to push NATO allies even farther, upwards of 3%. So this is a delicate balance that she's playing here. So there's a lot of factors that come into play when it comes to these potential conversations. But again, I think when it comes to who the EU is going to send as sort of an emissary, she's probably the best bet.
Well, how about just doing business for herself here? Could she secure carve-outs for Italy? We've talked about this today, whether it be cars, wine, or anything that's specific to the country that would then lead other European leaders to the White House to try to do the same. Is that something the EU is worried about happening?
Yeah, I think there is some worry here. And you're exactly right. When it comes to major Italian exports to the United States, things like wine, cheese, pasta, there's a nervousness, I think, on behalf of Italian exporters that this is going to hit them pretty hard, and American importers as well. You know, people that own these like small businesses that rely on Italian imports. And so I think what we're nervous about seeing is that if she's able to get these carve-outs, even if it's not on paper, even if it's just Trump talking in front of a bunch of reporters saying, oh yeah, we worked this out during lunch and we're going to carve out X, Y, and Z, that other EU leaders will see that as a sign that perhaps they should also take their own special trips to the White House to try to get their own carve-outs. And that's, I think, where you could potentially see some trouble. But I think for this White House, what they're really pushing the Europeans to do is to work together with the United States on Chinese exports, on Chinese overcapacity. Mm-hmm. And I think that's what we need to keep in mind as well.
But is there a risk Europe actually gets pushed closer to China in the process, Rachel?
Absolutely. And I think that this is a very delicate balance that this administration needs to strike. I mean, if you want the European Union to work together along with the United States against China's unfair trade practices, you have to make sure that you're not targeting the European Union for your own tariffs and your own trade war, which in turn would lead them to seek other partners and potentially deepen their partnership with China, because the United States is now seen as an unreliable ally, an unreliable partner in terms of trade. And so I do think there's a nervousness there, but with this 90-day pause, I think that does give some space, some wiggle room. Trump said today that there will be some sort of deal between the United States and the European Union. And I think that is potentially going to hinge on where the EU falls in terms of its own approach to China. And we just have to wait and see, I think, with time over the next 90 days into July, what that ends up looking like.
Rachel, it's always great to have you. Rachel Rizzo at the Atlantic Council's Europe Center with important analysis today as we prepare to hear from the president and the prime minister. Thank you, as always. They're still having lunch, Kaylee. We haven't seen a readout on the menu, right? What do you serve the prime minister of Italy when they come over for lunch?
I would imagine you don't want to take your swing at Italian because she can get it
probably
better
not,
at home.
would be my guess. Yeah, well done steaks and burgers don't play that great in Rome either, though. That's why things are going late. They haven't even called the press pool in for the Oval Office bilateral, but when it happens, we'll bring it to you live here on Bloomberg.
Indeed, we will, just as we continue to keep track of financial markets for you, which have to react today to the threat of termination, or maybe not a direct threat, just a suggestion from the president of Chairman Jerome Powell. We're going to get into that next with Alonzo Munoz of Hamilton Capital Partners. So that's just ahead here on Balance of Power on Bloomberg TV and radio.
This is Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
Welcome back to Balance of Power here on Bloomberg TV and Radio. I'm Kaylee Lines alongside Joe Matthew in Washington, where we have one eye on the White House as President Trump is meeting with the Italian Prime Minister Giorgia Meloni, and we expect to hear from the two of them as they speak with press any minute now. But we also have our other eye on financial markets, as always, with stocks modestly higher today, bond yields fractionally higher as well. We're up 3 basis points on the Fed-sensitive 2-year yield, 379 and change right now, Joe. And of course, that says the market is trying to figure out what exactly it can or cannot expect in terms of leadership of the Fed and any potential changes President Trump would like to see on that front.
Yeah, we've got the termination post on Truth Social. President Trump is done with Jay Powell again. He did tell Bloomberg less than a year ago he had no intention of firing the Fed chair, but in fact called for his termination, referred to him as late and always wrong.
Yes.
I think was the post. But there's other factors at hand here today. It's actually some pretty